reaching for the sky. Every trade, oh, never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Splintering in awe, it's blending. Mind on fire, never ending. Dreams of gold, relentless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
What's up, party people? Welcome to the stream. How's it going? Friends. Hello, hello, hello. I still wish YouTube would go back to the old style of me being able to see y'all's names. Oh, wait. Did it go back? No, it's still the thing. What's up, Julian, Big Sky, Icewild? What's up, Bad Winkle? What's up, Crypto Codes, Ethan, TRC Nation, Rosanjo, Leo, Gabe, Texas Raj, good morning. Sharon, Color Craft 5, Salt and Sand. Good morning, good morning, good morning, fam. All right, hold on. I'm trying to get everything launched here. We got a new indicator. Exciting as that is. Testing, and I actually did something different that I don't normally do. I released it to all of you guys. Y'all can test along with me. See if this thing is any good or not. It's a work in progress, but the thing is we need futures data to power it, right? And so, because it needs futures data to power it, you must be logged in to test it. And because I can't test it on the test server while I'm also trading live, my thought was, well, let's just release it to production under beta tests and we can all play with it and see if it's any good. Tell you all about it in a little bit. Same shirt, different color? Honestly, probably the same shirt. I ain't gonna lie. Just kidding. No, it's probably the same shirt and the same color. Although I do have a cardigan on today. I'm going a little Hemingway with my jacket. It's kind of cold outside. It's kind of cold up here. It's like 50 degrees in here, it feels like. So anyways, you guys can have some fun with this today. We'll see if y'all enjoy the new tool. I'll tell you all about it. Wait. Oh, I was scribbling on my chart some test ranges. All right. Let me get that hedge pressures on here really quick. 6926. All right, this is why I feel like I was basically scribbling on my predictions, what I thought was gonna happen. We're gonna probably have we're either gonna go there and then up, or up and then down. It's gonna be sort of like a candle that's just similar to yesterday. My predictions are correct, or we just fall straight down. One of the two. 25,608. Any rally today? I don't think we get one, but we'll see. Like whatever goes up will likely come down. A little pre-market giveaway in a second, guys. Smash that like button because we're gonna do some giveaway accounts as always. Today in the news, Tuesday, Chicago PMI. That's really nothing big as far as movers goes. HPI composites. Blah 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 blah. Minutes today. That's it. Oh, minutes. Oh, minutes. Market will go up. Market will go down. Is that your prediction? Is that right? The best kind of prediction, right? All right, let's double check a couple things here. We still have a gap fill on NASDAQ to be honored on the future side. I don't know if we've filled it yet completely. We have not, and I do have it marked down here at like the 600 level, I think is where it is. Yeah. Okay. Now the new indicator, don't even laugh at the name. I needed something. Hold on. Wait a minute. Oh, where is it at? Hold on. No, it's not even on the list. Oh, maybe you forgot to add it to the list. Alright, I'm just gonna have to make a quick modification real quick. We called it speed just to be just something stupid. I need a name. Like, I was like, just giving it, because you have to put a name in here. I was like, type something in, and maybe we'll have like a game where we'll just vote on it or something. Something arbitrage, something, who knows? Something, right? Who knows? We'll come up with something though. 40 degree. It's 40 degrees where you am, where you are. No, 50 in. It feels like it's 50 in here, not 50 outside. It's closer to like 30 something outside, I think. How come my Fun and Futures not on the poll for giveaways? I already gave away all my Fun and Futures accounts for the month. I did so many, I gave them all away. I got tons of Fun to Next accounts though. Still. So I switch it out. He didn't add it to the list. Well, I mean it's there, but I can't add it. Okay, hold on, let me send him a message really quick. I was like, get that in for market opens. Okay, we'll get it. So it's plus 30 and you say it's cold? Yeah, for me, well, okay, and like, you know, Texas style cold. For you guys, you're gonna laugh for me saying that it's cold. And y'all are gonna laugh at me. And you're like, you sound like freaking Crocodile Dundee. Cold, that's not a knife. Well, that's not cold. Seriously, like, Texas style cold. Remember, we have like 100-degree Christmases here. Now, you know, I wake up, it feels like it's 50 inside of here. Like it's literally like, oh, how'd it get so cold? Okay, let me draw my stuff here really quick. All right. So my thoughts today, and it's just thoughts, is that we're cycling between like on NASDAQ. Let me just write it over here. I scribbled on my screen last night, so I wouldn't remember my thoughts today. 850 to like down here. Like we're essentially just gonna play the range. If you were to ask me like what I think, maybe down first and then up. I really think the market's gonna open and go down, but we'll see. All right, let me delete all that. Oops, not all of that, just this. Okay, let me make sure he can get this on here because I need this tool. I sent him a message. It's in production. He didn't update the list here. This has a different name. Did he put a different name on here? No. All right, so we're gonna have to hold on the new indicator. I'll talk to you guys about it in a minute. It's a modification to the resilience code, and what it does is it allows you to see the actual implied distance itself. So in resilience, we scale the lead lag of the index on a scale of 0 to 100. This time, this sort of like modification of the code is, okay, so first of all, the resilience indicator is designed to only be tailored to the box itself. Redistribution zone, open, close, half gap. And it's useful for those pivots, right? But this other indicator is an attempt to be able to use it in all times outside of the box. And the idea is at all times, you'll get to know if the futures, including contango and backwardation, are lagging or leading ahead of that implied value, and it tells you by how much. So the example that I had posted in chat last night, again, this could just be a coincidence. My thought was, let's make this thing and let's see if it's useful. Is it a coincidence that something cool happens, or is it useful? So we're going to watch it for a while before we decide on how we're going to use it. Posted something about it last night from the test server, and this is what came up. So this is the raw. I just put the word speed there because I need something to call it. We're going to call it something different. Essentially, it's the difference between the futures adjusted like value versus the implied value of the index, to tell you in points. So an example would be if this line stretches up to like 18, it's telling you that the index is 18 points behind, or the futures are 18 points behind what the implied value of the index is at any point in time. And as you see, the trajectory of this was up, and this indicator was greater than 0 at all times. Another thing is that as we were rally end of the day, this indicator went up and collapsed like 12 minutes before the rally stopped. So the idea is that as a leading indicator, is that a useful, like this is cool as shit if it does that every time, but does it, will do that every time? Who knows? Right? Is that just one time thing? Is that just luck? Is that just observation of a coincidence? Is this indicator worth anything? So let's just watch it for a couple weeks, and once it goes live, which should be live this morning, everybody can play with it, and we'll do what we normally do. It's normally me and a small group of folks just watch it, come up with ideas, and say, can we use this thing? But now all you guys get to use it. So let's just be real. No idea if it's useful, no idea what it's supposed to do, no idea the probabilities, no idea nothing. It was just an idea of showing the real-time number of points that the index is lagging, the futures are lagging behind the implied value. The implied value is the value of all stocks to fill their gap at the same time. So futures are behind that implied value, especially like in backwardation, where it's behind that implied value is baked in and aiming for a future point in time. Will that affect this even better? You know, like you're in contango. Remember, like contango, futures may equal the index value, but futures aren't aiming for the index value now. Futures are aiming for the index value in the future. So there will always be a discrepancy between the actual value of the index and the actual value of futures. We call it contango backwardation. However, when you adjust that out, you can see the raw value of how much the index is lagging or leaning behind that implied value of the market. And so the question becomes, if this number starts to grow, then the stretch between them becomes really big. And then by how many points? It says 20, then you get a 20-point run off of it. That's kind of the goal, right? You can see that that's the distance. So you can decide, is there a threshold? The ideas would be, is there a threshold where that stretch is worth trading off of? Is there if it's trending up, do we jump in? If it's trending up and decays really quick, do we jump out? Like, these are things that we don't know. Maybe this thing is completely useless. But instead of watching it by myself with a couple people, you guys get to play with it too. So have fun and stick around and check it out and tell me what y'all think. The idea is arbitrage, pure real-time arbitrage in futures. If this number gets really big, futures are lagging behind where the S&P will be going. This number gets really small, futures are leading ahead higher than the implied value and should likely be whatever. So is this going to identify the trend? If it's greater than 0, are we trending up? If it's greater than 0, will it snap up really quick? Will this be an exhaustion squeeze when the price is going up and this is going down? We don't know, but watch it, come up with ideas, report back to me, and we'll see what happens. If anything, this thing could just be a giant dud and not be useful for anything. But the idea is when you're taking notes and doing some research and doing some testing, look for repeatability, look for patterns, look for something that happens multiple times. He literally did not upload I can't reference it in the indicator list, so I can't load it. And then he's like loaded to production and he has not been on since 7:30. No. Let me call him real quick. All right. Let me hard reload and make sure that that just doesn't trigger. He said he could see. He's like, I could see it in mine. Hold on. Yeah, it's not here. All right. We'll figure it out. If not, then I'll hype it tomorrow. We'll get this in before market opens. Okay, guys. Fed minutes today. That's the big thing. That's it though. Nothing else. Okay, guys, we will be giving away something in a second here. What do I want to give away today? Ooh, man, I got a bunch of Tradeify straight to fundeds to give away. I'll get those likes up. Maybe I will endow this community with a bunch of straight to fundeds. I like that one. Got some for funsies. Let's do some some what do I want to do? Where's my list? Here. All right, so every morning pre-market, for those of you that show up early, we like to do some fun giveaways here. And today, let's start with some futures desk credits, $200 worth especially. You can buy whatever account you want with that. Current promo is going on with some of our prop firm partners out here. 25%, 35% off of Tradeify Select plan, their brand new plan. It's one of the best out there according to our ranking system. We do a hard reload. Hold on one second. All right. Hard reload done. Okay, let me try this really quick. Okay, maybe it's caching an old value in this thing here. Hold on. Nope. Bum, ba, 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 bum, ba. Type in TFT in chat, by the way. We'll get started in a second here. A little giveaway. Starting over. Back to, so we're trying to get syndicator loaded. Okay, so back to it. 35% off the Tradeify Select. It's one of the highest ranked plans that we have. My Funded Futures Rapid plan, also one of the highest ranked plans we have. 20% off of that. It's 3 days to pay out. Quickest path to pay out. 90% off of ETF. 90% off of Apex. And forget your 90% off Apex. And ETF sales are always like when they happen, it's the time to buy those. Don't buy them any other time though. 90% off is 90% off. It's really damn good. All right, futures desk is gonna be 60% off end of the day, 70% off static. We'll give away some credits right now. You guys can check those guys out. Type TFD in chat and we'll hook you guys up in just a second. All the early birds get a chance for a giveaway. Control Shift R. Okay, hold on 1 second. Nope. Still not there. Yeah, I think the server is cached on the old version. We need to. Okay. All right, maybe we might get it today. Yeah. All right, we gotta clear the cache on the server. Maybe that's the thing. Like the loaded production one seems to be cached version. So we're gonna clear the cache and see if that changes everything. It's not showing up in the indicator list, so we're gonna have to call someone else to do that. And hopefully that gets done before market opens. We shall see. Participants, everybody smash that like button really quick. Do me a favor. While you're sitting here, I got your attention. Before we do this giveaway, everyone scroll down to the bottom and pick that thumbs up button. Give some love there. You guys know the drill. 1 out of 5 people have done it. We'll make sure we'll spin that wheel. We get that number up to closer to 400 or 500 right now. Then we'll do it. Everybody, below the stream, thumbs up. 1, 2, 3, 4, 5. Let's go. Giveaway in just a minute here. All right, pre-market, we are sort of just sitting flat, going nowhere. I would say that my belief of where we're going to go today is we are going to play a range that's very close to hold on. Normally flat is usually up. In my opinion, flat usually means up, not down. With no volatility, down is probably unlikely, but even if it is down, it's down very quick and then it's back up. And this previous support is the resistance we're probably going to test. And this might be something that we see. We'll call it like a giant heartbeat day. Like blip, blip. Which way first? That's the real question. If you want to be the smarter trader in the room like myself, let the first move play out. Take the second and third moves if that's the day we're going to get. No volatility, so it'd be kind of odd to see the market open and dump. Again, end of the year, it'd be kind of odd to see the market go to here. We'll have to see. Obviously, keep your eye on NVIDIA and the bigger stocks. And I would say that this is about where we'll probably stay. If I want a daily chart really quick, I can show you all real quick. Type TFD in chat, friends. We can get that rolling in just a second here. The look I'm going for, let me see if I can't find like a bigger, cleaner charts. I can just look at this here. The look I'm going for, like, you know, something like this, where it's just like, it's trying to go down, but it's not like falling down. It's like this sort of thing, wicks on both sides, like this. Everyone see what I'm circling? My thought is that 2025 closes out like this, right? So there's going to be plays on both sides, which I think is kind of cool. You know, obviously we've just had one day like that. I think we have a couple more days like that. I don't think this is the flush day because the volatility is not really there. So essentially, you know, just a day like, again, I'm just speculating out loud, but lower lows and lower highs. Just, you know, a bunch of days like this, you know, just like days like this, days like that. And then, you know, we finish out the year and then maybe the new year starts off being stupid and then we can rally or whatever. So whatever it is, you know, this is the middle, like no diddle in the middle. The first trade is gonna be a coin flip, which way it goes first. And see if the coin flip is up or down. Depends on your belief system here. All right, you ready to spin that wheel? Let's go. Let's go, friends. Smash the like button really quick. We're starting about 15 minutes here. No trades overnight for me. Not yet. $307 out of 550. Let's go. Thumbs up button. I think that's a pretty easy ask, right? Let's get that. Let's get that up a little bit more. A little bit more. Everybody, you are in the stream right now. Thumbs up button, and we're about to spin that wheel. Just a second. Let's go. Let's go. Let's go. All right, cool. Free stuff. All right, $200 credit with Futures Desk. Futures Desk is pretty cool because you can actually like build and make your own plan on their website. We're not any partnership with them or anything. I just like them. I think they're great. So one of the few prop firms out there that I just kind of like think have a really cool system. They're pretty goated around here. People like them. When you get your accounts, you can come in here and customize your plans. You can go here and you get sliders. You can move them around. Pick the plan that you want. You want like a end of the day drawdown. You want to give yourself more drawdown, more contracts, bigger daily loss limit, fewer days to pass, and you can slide that slider around. And you can see, and this is kind of like a testament to like how these risk models work out there. You can see that more days to trade. Look at this. According to them, 5 days to trade is 409 and 12 days to trade is 339. You see how every extra day has tremendous value to this account. Anyways, it just lets you know about prop firms out there about time to go live. So you can mix and match. What we're giving away right now is a credit for $200. You can go spend it however you want. It's like a gift card. And we are going to spin that wheel in just a second. All right, just oops. I should probably do a. There we go. Got it. Thank you. Yeah. Done. Excellente. All right. You guys got to do a quick before the market opens. Everybody do like a hard reload. Control Shift R. You pop that thing up, and then we'll get ourselves our little indicator here. Should be getting 2 values. Which one? Let me see if I can't get the let's see on here. Settings. What the heck? Settings is not opening it up. Settings doesn't open up these settings, by the way. Settings is not opening up. Maybe the settings is in here again. Okay. Oh. So it's here. Yeah. Bum, 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 bum. Settings is not. Which line is being... Oh, wait, no, never mind. Oh. What the heck is going on here? Oh, he just... This is funny. So he didn't even... again, this is extremely beta. See, we have this right here. What is what? We have this. Again, extremely beta. We haven't updated this. This still has the resilience code and the resilience settings and stuff. Let me see if that was that. Yeah. Will there be follow-up videos for the free boot camp? Unfortunately, the holidays and just stuff kind of got in the way. Like the 20 days boot camp, you guys have pretty much gone over anything. There's 10 more classes to go over. We just, I mean, the holidays, we kind of like ran out of time. Or actually not 10, sorry. 5 more classes to go over, I think. We made it to, we made it all the way to class. I said 10 more classes. Y'all made it all the way to irrational roles. So there's going to be, okay, 13, 14, 15, 16. There's 5 more classes to go. If you guys want to keep going, just stay for the second month. Yeah, it wasn't intended to be like that, but I got the flu, got sick, and then, you know, holidays just kind of like stole the rest of our time. But the final videos are going to be liquidity pocket every single time setups, pre-market techniques, the VIX masterclass, which is a pretty important class. I'd say that's alone worth another month. Then we have the finale, which is kind of like the summary of everything, and then exit targets. So these things, you if you watch all the videos that are from the old boot camp, you can just watch the videos yourselves. You don't have to do them live. So for like round 2, yeah, we tried to squeeze it in as much as we could, and then the holidays just kind of like took over. All right, let me spin that wheel. Let's go. Let's go. I'll give away a couple of these for you guys, you loyal early birds here. Supporting the bull zone. I need like a hoodie, man. I was just cold this morning. I'm wearing like a little prestigious. I look like a Ernest Hemingway over here. Wonderworld 009. Wonderworld, you want to type something in chat? Flat open today. We'll do 2 of these. Flat open today for S&P. Nasdaq somewhat flat-ish as well, so be very careful with the resiliences, obviously, and other things. The market's going to be choppy a little bit. Let it decide which way it's going to go. Whichever way it breaks out, it's going to move the whole way. So we got MHP at the bottom. We got testing previous day lows, highs, previous day consolidation is highs. The taxes in House in Texas have heating. They do. But it's like all the way over there. I'm so lazy to go click that button. IA 5715. You guys have $200 credit. Congratulations. Okay. We'll do giveaways all throughout the stream. And we got giveaway bonanza on the 31st tomorrow. Giving away lifetime rock scooter tomorrow. For those of you loyal folks that'll be here in the chat. If you've spent $1,000 using our code with any of our prop partners, if you use $1,000 using our code with any of our prop partners over the course of the month, you can enter to win Rocket Scooter Lifetime. Usually give away 2 or 3 of those things, depending on the turnout on the stream. So be here tomorrow. It's a $4,000 prize. You get free software, free lifetime, everything, free boot camp for everything. We're at dynamic hedge pressure on NASDAQ. Hold on. What is it? $608. Way down here. Yeah. Giveaway bonanzas tomorrow. Yeehaw. All right, new indicator is here. I don't remember which one is which, but I'll know as soon as it fires off. There's going to be 2 lines in here. One of them is an arbitrage distance for the calculated actual and the calculated implied index. One of them is the arbitrage between the futures and the implied calculated value of the index. So one of them is going to move around a lot more than the other, I would presume. And I don't know which one is which until it fires off, because the settings, like I said, just get this in there today so I can play with it. On the settings, it looks like still the labels. He copied the resilience frame here with just to get it out there quick. So it's going to be one of these two lines down inside of here, and I don't know. It's probably this one and this one. So I would assume that they're the first two on there. So even though there's still the 4 lines elsewhere, these two should be 0. We're only using 2 of them. So anyways, little mess. Oh, shit. Hold on. We don't have a name for it yet. We'll have to come up with a naming convention. It's an arbitrage indicator, so we got to come up with something cool for it. I was like, the first word that came to head was, speed. How fast is this thing going? So it'll be whatever. All right, giveaways over, you guys. We'll do another one in a little bit, so be here because we do a giveaway in about another hour or so. Monthly maps are looking pretty bullish for most of the most things. Some of the bigger stocks, though, came out with bearish monthly maps, a handful of them. We'll cover that whenever the market opens and gets ready to roll here. So today's move, we're either going to dump right out the door to here and then move up. I think that we're going to have that sort of, remember I told you guys, I was like, draw some trend lines. Remember I was being funny about that, but in reality, that's kind of what I was implying, was that that the market's going to be like sort of like trendline city, you know, like essentially that I feel like down. I feel like down's the plan. Oh, we'll see. Probably when we open, pop to there, and then turn around and sell maybe. Maybe. It looks like it wants to sell off, doesn't it? So if there's a quick flush to MHP, I'm gonna grab the long back off of that, but not to trade to higher highs. I don't think we're higher. I think we are trending lower. That is my call today. So we are going down. We're going down. The Arby's indicator. Everybody's favorite kind of sandwich. Let's go. If it's up before down, even better. Upper targets, again, you know, draw your trend lines. You know, just support becomes resistance. You know the drill in it when you're looking for this kind of reversal. If that's the case, slowly drift down. Support becomes resistance in this area here. The S&P, you know, again touches basically these areas here. Doesn't pass the 69.60 level, something like that. One candle up and then a bunch of candles down, or one candle down and a bunch of candles up. That's what today is going to feel like to me. No big deal. No big news stuff for minutes coming out. That is pretty ambiguous about what they kind of want to do. They keep changing their mind a little bit. Aggressive rates, non-aggressive rates, up, down. Market, I think, is going to respond pretty nastily today to the minutes, more so than normal, because the minutes may hint at something we overlooked the last meeting. Apparently, we might only get 1 rate cut this year, maybe 2. And, you know, the Fed was kind of like, we're going to wait and see what happens with the rate cuts. We're not really sure yet. Blah, blah, blah. But we got it anyways, right? And then all of a sudden the data comes out and we're just sitting there like, okay, this looks a little different than last year. Last year's anticipation. So we'll see what's going on here. All right. That first opening move looks like to probably be down a little bit. 1 minute till market opens. Had a 46K or 48K, something like that day yesterday. It was kind of nice. And we're off. Run into lower lows, right at the open pre-market lows already. Maybe that first move is to the downside. Should it be Taco Bell because I have the sign in the background? Yo quiero hedge pressure. I think so. Yeah. What are you guys doing for New Year's? Oh wait, listen, we'll have small talk after the market opens. Let's focus here. Downside target 600 here. Downside target 36 S&P. We open, just dump right out to that. Then that's probably what we're gonna end up playing with today. We'll see. Nothing last night for me. I just chilled and took it easy. Swing. All right, let's see how this new indicator works out. All right, I'm gonna grab a quickie little long out the door here in one of my fund index accounts, just to take the gamble, and let's see what happens, just to fill that gap there. That's it. Nothing on the big account. All right, let's see what these numbers are doing. For this data to come through here. All right, we're gonna just open and dump. Res negative, half gap. So yeah, probably not going to be. We're gonna wait a minute or so. Flat open, resilience is gonna be choppy. Remember the drill. When we have a flat open, resilience is gonna just shit all over the place. So just let it develop for a minute or two before you make any big decisions. I would say the open play on this kind of environment, it's gonna be kind of blah. Market's gonna move one way or the other. Big move, and so there's gonna be some reversals today. So let's see how this new indicator is panning out. Here we go. Illiquidity pockets and volatility here, S&P. All right, so nothing yet, and the numbers are really tiny. I had them throw a change in there, so let's see if this. Again, it might be buggy for the first couple iterations. Okay. We should have two indicators here. I don't want to play this one. Do I want to catch along and go to the upside first, or take the downside play first? Wait, I didn't want to grab 10. What the fucking program that at 10 already? Oops. I wanted to grab 5 on that. Here we go, freaking 10 lot there. Come on now. A 5 lot. Trim that out real quick. 10. The heck did I had 10 sitting there? Oopsies. And the scale on this is kind of interesting. Well, it is also a flat open too, so we may not see a lot of so the scale is not even picking up the value. So the number is greater than 0. That's important to see, which in traditional sense would imply that we want this thing to go up. So we'll see. So basically when the new indicator is above 0, what it implies is that the distance at which the implied value, or that the futures are behind the implied value. The futures are slightly below the implied value. So if this is above 0, it's technically supposed to go up to chase it. So an example is if this thing decays out, it could be an early warning sign that the market was in harmony equilibrium. This flat day is probably going to be that result. So probably, looks like S&P trying to sell off here, but we'll see. Well, the scaling on this is a little interesting. And we have 2 of them, and I'm not sure where the other one is. Hold on. Where is... Looks like the second one's not even there. Right. So res is positive. Things are good. Inside of illiquidity pocket, it's more like just coin flip gamble from here. Which way you think it's going to go? Up then down then up. You know, be my guest here. All right, grab this in a second of my fund and next accounts. Good deal. So right out the door, I took a long in my fund and next account, just right out the door. One of them, and then now I just added to a second one, a smaller position though. I don't think a 5 spot's gonna be worth it here. Oh, the futures one is not done yet. Oh, okay. Okay. So the futures one isn't done yet. This is just the original old school one. So the question is that can I use this ability to see if the index, anytime that this line, the orange one, okay, this is basically the difference between the calculated value of the market cap weighted index and the implied value. So essentially it's a numerical amount of how much the index can move when all the gaps get filled. So you see how it's basically sitting at 0? It basically means that the market is as balanced as it can be. 0 means balanced. If this indicator is way above 0, then it means that the index can move up a little bit. So there's potential. It's almost like a potential energy. And I don't know if I want to do this larger trade anymore. I'm trim this down to like 3. Down then up first. Maybe we'll be trying to sell off a little bit. Keep it light. So the answer is that if this orange line is above 0, it means the index has some potential to itself, forget futures, the index itself has some potential to go higher in the future because the stocks can move that much distance to fill their gap. So if the stocks were all to fill their gaps, this yellow line is to tell you how much value the index will change. Currently it's sitting at 0. So it's basically telling you everything is pretty much as balanced as it can get right now. Yeah, that's it. I don't think we're gonna get that breakout move. So today's liquidity map, nothing. I would say that if down 4 up is the trade, then that's kind of the play. I am trying to take something maybe off this opening move, but we'll see. Whatever direction it's going to do, it's likely to reverse back in at some point. So if down is the first play, then I'll just keep it light and keep it small. It got in, popped out at 10 contract on accident. Yeah, some heavy selling pressure, but we'll see. Because right now, the general idea, we don't have the futures one yet, so he just has this one put in. This is telling me that if you were to snap your fingers and every stock were to finally complete its move, the implied value, which is like the remainder of the move is up. So when that line is above 0, it's almost like it essentially resilience scales the lead lag. This just purely shows you the direction of the index's potential move. So if it's above 0, it's telling you the index has this much potential room to move. So the idea is that right now stocks have more implied value to fill their gap than they do implied value to go the gap this way. So the going understanding is that when it's like this, the index wants to go higher. And that's, again, we don't know what this indicator is going to show us, but the idea in theory was that while it is selling off, you can see that more stocks, if the index were to complete its move, it wants to go higher. So the futures are likely to go higher. I have a futures arbitrage indicator to push with this. It's number of points. So right now the index is very balanced because it's almost 0, just slightly above 0. So it's not really a lot of potential move there. But the futures one will also give you point distance in futures. So example, if the futures one says 30, then you can say, aha, the futures are lagging 30 points behind that implied move. So maybe I might want to take the long side or whatever. But the idea is it's beta. I just figured I'd let you guys play with it too to see what it looks like. If we calculated DD bands on CME close, Mariah, they are. Yeah, they are calculated on CME close. That's correct. DD bands are CME close plus or minus 1 risk interval, baby. Yeah, let me get that. Little bull zone support play. Not gonna get that opening bump out of this, huh? That's why I put something small. We've got bull zone, bear zone, MHP down here. So my thought with this one, and again, remember the indicator is beta, and it very well could be that you put a plus sign where there's a minus sign. I haven't reviewed the code or anything. I just wanted to see it live, just to see what it looks like live. So I'm gonna do full code review, full release, but you guys can play with this thing and see if it has any utility. Right now it says 0.1, which means nothing, right? The market is sort of just flat. So there's not any kind of potential. Now the potential is starting to grow, which is telling me that there's more. So think of it like this. The higher this orange line goes, the more stocks are right next to its half gap, but above it. Okay. So essentially, if the stocks were to cross the barrier, this would jump really quickly to the downside. Almost like a resilience in a way. But it's purely just showing the implied value in real time. So we'll see how much that is. So an example would be the futures. Now, the futures arbitrage one is not there. You didn't finish that. But futures are dipping, and the implied value difference is going up. And so the potential of the futures could be maybe could it go up. We'll see. Let's just play around with it. We can decide in an amazing fashion that this is a brand new cool. You know, I got drunk at a wedding and I sat there like thinking about, oh, I got this idea. And then I said, well, maybe we can decide, let's add this to the arsenal, or we just, in a spectacular fashion, we all just decide to like throw this thing in the trash, you know, together. We'll see. We'll see if, you know, 6 shots of tequila can produce magic. In certain senses, it's known to. Right? They were doing shots all day. It's gonna be one hell of a boring day, though, I feel. Don't rush a trade today, though. That's what I'm thinking. And down before might be the way to go. But I think that down is the pressure. I don't think we're gonna get like any big rally today. Might as well just give it a try, I guess. Well, I didn't have 10 contracts. I was a kind of a silly accidental long there. Oh, TRC, nice, dude. I'd like to see what you're coming up with. What's exactly this indicator is measuring? All right, so let me tell you what it's measuring. Just like resilience, there's 2 values to the indicator. The second one isn't in here yet. He didn't finish coding that one. So basically, what the indicator is supposed to do is it's looking at, we do one thing. We calculate the actual value of the index. We calculate it. We have the market cap times the price. We calculate the actual value of the index. What is the value of the index based on where the stocks are right now? Number 2 is we take our implied value calculation, which is from resilience, which means if a stock is on this side of its half gap, right inside of its gap, we calculate the distance that the stock can move to fill its gap, and that's called the implied distance. So an example is if stock is in the middle and moves up a little bit, then if you snap your fingers, filling its gap would add a certain amount of value to the stock. So anytime you're trading in between the open and close, the next destination is either the open or close. And so whenever you're above the halfway point, the algo goes, okay, it's going to go up this way. If you're below the halfway point, the algo goes, okay, it's going to go this way. And so we calculate that implied value, and then we recalculate the index. So we take the actual value of the index, the implied value of the index. We subtract the difference, and we do some measurements and some other considerations that creates resilience. This is just the raw implied minus actual distance, minus the other resilience factors, to show the distance it can go. So an example is if this number goes up to 10, 20, 30, 40, it means that the stocks have fallen to half gap and there's potential for them to move higher. So the higher this number is, the closer stocks are to their half gap but above it. The lower this number is, the closer the stocks are to half gap but below it. So it shows you the potential for an index bump, if you may. So essentially, like, two factors make it go up. Number one is, let's think of the positive sign only. The closer the index gets to the middle, the higher this indicator goes. Secondly, with that being said, the bigger the gap is and it going to the same middle with a bigger gap, the higher it goes as well. It shows the potential move of what the index can be. The index can gain X many points if the stocks were to bounce on the half gap and then fill their gap this way. That's how many points you're supposedly going to get. Now, it's alarming that it's 0.1. I feel like the scale is off, so I have to check the code on that. Like with, you know, it should be closer to like 10, 20, 30, 40. So I don't know what the scale is or how he did something with this. Or maybe that just ends up being what it is. It is a flat day. Anyways, that's the goal, to see if it has any weight to do that, to let you know of like a potential move. So this is missing the crucial component we want to test, is the futures arbitrage portion of that. That's actually missing. So didn't finish doing that yet. All right, so bull zone bottom here. This is kind of the place I was thinking, okay, I'll take the long off the open and then the long right here. So on this end right here, bull zone bottom, that's the place. We have red line on S&P, which is probably where I can fall to. Somebody said I'm a degen taking a long. Probably so. We'll see. So the question will become, with the futures direct arbitrage here. Remember, resilience is just letting you know if the index is, or the futures are leading or lagging behind the implied value of the index. And it's a scale of how much it's leading or lagging behind, just a scale. This is going to be how much potential move is there. It's giving you the implied value, the distance the index can actually move. The question becomes, if this says 30, 40 points, it means that the stocks are like bouncing off a half gap and they've got 40 points to go. The higher it goes, the closer the majority of the stocks are to half gap. So essentially, the closer stocks are to half gap, the bigger the effect it's going to have on this. Similar to what happens with resilience. When you cross over the half gap, resilience moves quicker. But I thought if we were to remove that portion and just only look at that, it might give a little bit more actionability to resilience anywhere on the map, not just tiebreakers off the box. So the example being, if the futures were to fall to bull zone bottom, the bull zone bottom is below the redistribution zone, and this thing stretched to like 30, 40 points, you're like, oh shit, it probably can go up to catch up to it. And so that's the thought, right? Don't see if that has any weight or whatever. We'll see. Like I said, right, this indicator has been greater than 0 the whole time. And so, you know, is this desiring, is that portion of resilience important outside of redistribution zone? That's the question we're trying to answer. The minute somebody said I was a degen, and then Mark, you put that, hey man, I'll put my money on the new tool and see if it's worth it. Why the fuck not, right? That was 5,000 bucks in this account, closing that one out. I grabbed it in my funded next, and 3 of them actually. Excellent, just to fill the gap here. Let's grab something on that. Excellent. Longing longs, excellent. Fuck yeah, let's go. I was trusting my new indicator really quick. All right, that was cool. Now I might close those out on the gap fill. I'll be a DJ and hold the rest of it. So that was pretty cool. Let's go with that. Bum, 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 bum. Who knows how much of this fund and next money I'm gonna get to keep though, for the kick me to live. I'm good to get the gap fill there. Hey man, new indicator was positive. Just gotta say. That implied, and then we filled the gap. Let me just close out there and just do whatever. Yeah. So this isn't resilience down here. This is I just rewind the stream, I went over it. Now the question is, the scale's a little weird. You can use the gear on speed indicator fixed to precision. Oh, okay, hold on. I don't want precision though. Okay, hold on. I feel like he made this, maybe he missed the instruction and made this some kind of scaled thing. 0.15 doesn't make sense. Unless it's just because it's a flat day, it's very odd that this is between 1 and -1, which leads me to believe he has scaled this on a scale percent or something. So let me double check this in real time. Well, I mean, so forget the values in the column yet. Remember, we're bug testing this one live and having fun with it live. That's a good deal, like right out the door. Looks like I did close out at the gap fill here. I'm just gonna kind of wait on this. Higher highs first or lower highs first? Or lower highs. So that sort of illiquidity pocket. Yeah, so resilience was positive, new indicator was positive. So the new indicator is it's a portion of the resilience code. So the idea is that this new indicator is going to give you some sort of predictability anywhere. Hopefully, like if the market's like fall into bull zone and bull zone is below the box and this indicator is greater than 0, it's telling you that the stocks are right here. So keep in mind, does everyone understand what I'm saying? Like the closer stocks get to half gap, the bigger this is. It's the same part of the code that means when stocks are, you guys remember when stocks are like chopping around the middle, resilience gets choppy. That choppiness is what we're trying to extract right on the edge. And that's what we want to see. So an example, I'll do it one more time. The example being, if all the stocks are here at 0, okay, this indicator will be at 0. Why does Rocket Scooter use SPY and QQQ to convert futures instead of SPX and NDX? We're using SPY and NQ because they're tradable. It's SPX and NDX you can't trade. There's no supply and demand on them. So they're actually a better representation of the supply and demand in the landscape than the actual index itself. The index is not tradable, so it doesn't have an open and a close price. It doesn't have a price at all. The index is just a calculation. So everything that we built, there's symmetry, right, between the equities and the index. First, the easiest answer to that question is we don't go buy the index data feeds. So we couldn't do it if we wanted to, but we don't do them. We don't buy them because it's not necessary. The equities close is based on the supply and demand of the instrument itself. Supply and demand will match that arbitrage with the index itself by the end of the day and really be more of a driving factor than the index itself. The index is options, which drives, you know, it's like a cash swap on the index, but the options don't settle in any shares of an index, right? SPX options don't settle in anything other than cash. So there's no pressure that applies on the market. So we found with our early studies of this was that when you SPY and QQQ, they're more representative of the supply and demand, that push and pull of the market. So it turned out to be just as good of a, if not better visualization of the market to base everything off of the actual ETFs. They're all tracking each other anyways, but the ETF is going to also show future potential, like essentially more information is baked into the ETF than the index, believe it or not, because the ETF is tradable and the efficient market hypothesis states that any information will be priced in. Well, the index value is only priced in if people are buying the stocks themselves. But if you had inside information about the Fed, you would be buying index products probably, and therefore that wouldn't bake into the index itself. You wouldn't be buying an Nvidia and Apple or whatever. You might just be buying SPY itself, right? Or SPX calls, and those SPX calls will be hedged in either futures or shares of the underlying, which there aren't any, so people will be buying the ETF. So the ETF itself is visually representing additional information on top of the index. So we were like, okay, well then it's probably better just to base everything off SPY and QQQ. So we'll see. So the way this indicator, but that's a really good question, like why we don't use the index values and why we're using QQQ instead. Very good question. All right, so ladies and gentlemen, indicator was positive, things were selling off, and we burped up to the top. This is the second day in a row it's done this, which is good. Very good. So what we actually did with this indicator is, the example is if every stock was at 0, so essentially think of all the stocks, Apple, Nvidia, whatever, inside of their open and close. The gap opens here, closes here, here's the middle. If everything's sitting at the middle, then this should be 0. If one stock were to fill its gap here and everything was at 0, it also will be 0. What it looks at is the distance between where the stock is inside of here, excluding the boundaries. The stock is here. It will look at this distance to fill the gap and then calculate how many points it adds to the index. If a stock were to fall to here, it'll use this distance to recalculate the index as well. So essentially, when this thing is really high, it means, like if this thing goes to infinity, it means every single stock is really just slightly above the midpoint. If this thing drops really fast, then every stock is slightly below the midpoint. If this thing starts to pull back, it means every stock is pretty much getting close to filling its gap. We exclude stocks outside of the barrier and only look at the middle. So when every stock is at 0, this is at 0. When every stock starts to move, it takes off. When every stock starts to fill its gap, it decays back to 0. Do we all understand this? Everybody on the same page here? Let me repeat. If I'm drawing every stock right here and every stock were to move from here to there, then the indicator would go straight up really quick and then start to pull back and pull back and pull back when that potential is gone. When the burp is the biggest, the potential's the biggest. And when it pulls back, the power is gone. I was thinking in my car, like I was at a wedding doing fucking shots of tequila, dude, one after the other. And I'm sitting there like staring off into space, and IDOC is like, "Are you okay? You look worried." And I was just like, "No, I'm doing some." I was like, "I'm in the zone." She's like, "Okay," because I was sitting there like this. Apparently, I was, you know, calculating what. So, anyways, so like I scribbled some notes on my phone. I immediately went home. The minute I got home, I opened up a spreadsheet, and I coded it in Visual Basic VBA really quick, because on the spreadsheet I'm able to yank every single one of the values of the stocks from Thinkorswim, so I was easily able to do that. And then I whipped up some code just to click a button to this calculation, and then I did that on Saturday and gave them Jod. I was like, "Hey, can you make this an indicator by Monday?" He's like, "I'll try my best," and we had it on the test server yesterday, so something this is what it is. Maybe it is 0.11. The fact is that it's very close to 0, but I'm surprised that it's not a lot more. But it is a flat open, so maybe that's just a characteristic of it. Yesterday's application was interesting, because yesterday was pretty neat too. The question is, whenever it gets really big relative, there's launch potential. Now it comes down to the fact of what is really big anyways, right? It's a subjective thing, like the RSI or something. How high is good enough, right? The idea is same thing here, right? When this mofo popped up really big, the move took off, and then once it started decaying, when it pivoted here, the move was over. It could be the move is over kind of indicator, the way it's turning out to be. So hopefully it can be useful anywhere. It's using some parts of the resilience code showing when the move is over. Like we popped up, and then it started pulling back, and therefore the move was over. See, that's right here. It started pulling back, and we peaked out and pulled back. So it's a leading indicator, as all my indicators tend to be. And is it actionable? It already does what it's supposed to do. See here, indicator peaked and started. Now again, it's subjective, right? What's the peak? Is this the peak? This the peak? Which one is it? So how can we create usability out of it? That's the real question. So an example right here is the S&P one is picking up a second time. Is this useful? Or is this thing just trash and we're gonna throw it away? We don't know. But let's some tequila logic here. So it works as confluence resilience itself. It works as a speed indicator of how much arbitrage potentially exists in the index itself. An example, the fact that it just popped up again, it's assisting resilience in a way. It kind of will mirror resilience in a little bit of a way, but be a faster version, because it's using portion of the resilience code, not all of it. So the fact is that most of the stocks just pulled back to their half gap. This thing is setting up for a launch again. You can see that as it's starting to move a second time, it means most of the stocks are sitting at half gap. I bet you if I cycle through a bunch of big companies, you might see that a lot of them probably just pulled right back to half gap. And it only looks at stocks that are inside the box too. So it ignores things that are rallying and things that are selling off. It looks purely at just the calculatable potential. So it looks like none of the bigs are there. The question becomes, my thought was that it can be used to tell me that the move is over. So example is if the S&P is filling its gap and continuing to go, and every stock that has gapped down has filled its gap, then this thing should deflate like a balloon, and I know all the gaps are pretty much filled. That was my drunk idea at the wedding. Do you guys follow what I'm saying? So imagine that like the index is here and starts trading higher, then dips really quick, and then all the stocks also dip really quick, but then they start to rally a little bit, and then all of a sudden the index starts to rally a little bit, and then the index pops a lot higher, and then the stocks finally go, and then they fill their gap, and then they stop, and then the market sells off. And this overshoots. The idea is the moment the stocks have filled their gap, this sort of speed indicator has deflated back to 0 when the stocks have filled the gap. So whatever overshoot this has done, you found out that the stocks have completed their move. So get out of the way. So the idea is it's like an addition to resilience to let me know like when the market's potentially got power to move. So in this flat particular day, the fact that it's going higher is letting me know that the stocks have fallen pretty much to their half gap or slightly above, but haven't dropped below. So it's supposed to be the quicker portion of resilience. Remember, resilience acts very quickly right here, and it's choppy when the stocks are flip-flopping through the middle. We took out that choppy part and tried to use that speed of that move as the indicator itself, just to see if it's useful as an exhaustion move, an exhaustion indicator, potential kinetic energy indicator. I don't know. Potential energy, kinetic or something. So the idea is can it be used for something? Or is it just going to be choppy noise? Is it limited by only strong gaps are good? It's a flat day. Is it going to be shitty, you know, on flat days? So an example is the index is tracking. This one is missing the other component, the stronger component that I wanted to put into it. He's going to program that today. This is just simply the difference between, this is how much the index can move. That's it. Based on where the stocks are. When this is above zero, the majority of stocks are sitting at their half gap and slightly above. It's missing the futures arbitrage, which is looking at, are the futures leading or lagging behind that? That's the second one. He didn't finish that one. So that's kind of the one that I was wanting to test today. This one is just fun for that sake of most of the stocks are sitting on top of half gap. When it starts to fall below, then most of the stocks are below half gap. So it's basically the choppiness of resilience that you're going to get to see kind of zoomed in. But, and just like resilience, it will be above zero, and resilience is above zero. It'll be below zero probably when resilience is below zero, but probably slightly faster. So when this guy crosses zero, resilience will cross zero as well. But you can see they're different, right? They're very different from each other because resilience has other things it looks at. So anyways, the question becomes, when I put the futures arbitrage portion in it, then is it an indicator that we can use anywhere? The example being that when the futures are trading this way and the stocks are trading this way, and the futures were to dip, like the futures were to dip down into here, and the stocks were above here, then we've got an indicator that tells me potential. So it's going to be a really raw, like a more raw version of resilience, but can be used anywhere, not just inside the box. That is the question. So anytime the futures were to dip a certain distance beyond the adjusted for contango, what I call the native value, which is removing contango and backwardation, futures has a current value. Filter that out, and then we compare that current value to implied value and can say it can be a resilience that can work everywhere. Be the point. The new indicator is a remainder that'd be positive no matter what. No, the new indicator is positive if, so we look at every stock inside of the box, right? So if a stock gaps one way or the other, in the halfway point, when stocks, the most of the market cap is above here, this will be positive. Most of the market cap is down here, it'll be negative. So when it's positive, it's telling you most of the stocks are above here. The more positive it is, the closer it is to here. So half gap is always a support pivot when you're on top of it and a resistance pivot when you're below it for each individual stock. So the idea would be if the futures were like trading up and the stocks were collapsing out, then you would get out of the way. And usually in resilience, we use it for that same capacity, right? Like, okay, let's get out of the way because it's probably moving. This is the sensitive portion is stocks pressing from one side or the other here. So this is designed to move very quickly when stocks are getting really close to the middle. And as you see, like the indexes, the futures are getting ahead of the stocks. Or sorry, the futures are trying to get ahead of the stock market. Right here, at this point, we had a red candle here and the indicator is already pulling back because stocks have jumped ship to the other side. It's still above zero. Most of the market cap is still here. So the question becomes, if it's greater than zero, I'm probably not going to try to short it, as an example. But again, there could be an error in the code too. That's the kind of, I'm trying to see what's going on. A little kind of curious why. Hold on. Wait, that is not, that did say 0. It says 10. Oh, it does? Oh, it is at 0. Okay. That's weird because the 0 line is, that is really weird. Let me do the scale on this. It's like very close to 0. So it's barely even moving. Like none of these, see these stocks right here? It's barely moving. 0.15. That's not a lot. So the one from yesterday was like said 10, 15, 20. So precision, let's give it like 2 decimal points. 0.03. Okay, so it's like I said, it's this isn't substantial anything. It just says it's a flat day. So you know, essentially 0.03 points on the S&P. Not a lot, right? This is pretty much no potential, even though it's moving up. Be splitting hairs at something that's 0.08. That's what I'm trying to see if this is like yeah, so this is a curiosity. Let me double check something. The values are weighted. So, yes, and by the way, Lars Blake, yes, the values are similar or weighted to the index. So we take, right, we weight in real time with the real-time market cap, just like the index. So we take the outstanding number of shares, right? Sometimes the price to get the outstanding market, or the total market cap. And that's what we're doing with it. So essentially, it's not the number of stocks, it's the amount of market cap that's sitting above its half cap, to be more specific. Correct. So it's weighted just like the index is weighted. The lethality indicator. Yeah, like the question now that I have, there's a couple limitations to it though. Remember, we're only looking at stocks inside of here because that's where the measurable implied move is. The index can still tank if some stock like an Apple is down here and falling down here. This won't pick it up. So just like resilience, it may only be useful inside the box, this portion of it, because this is the implied value difference inside of the box only. So like an example, a lot of your tech stocks being outside the box one way or the other will be pulling the index a lot, but also not calculated inside of here. In the future, we could create something that looked at every possible exit target and then calculate some implied distance, not just with this here. So example is, there's a monthly hedge pressure here. We can say, aha, there's an implied distance of that, and find the next level resistance for every stock. So if you snapped your fingers and everything completed the move, but that'll be like a much harder thing to do. So an example would be today, most of your big companies are not included. NVIDIA is not even in the calculation because it's outside. So this is not even reflecting what NVIDIA is doing. Hey, come in. Hold on, I've got delivery. That'll pants the eye doctor here. So remember, the index is going to move based on the sum of the stocks at all times. The question just becomes, if at the open or you're kind of trading inside of here, is that useful or not? Similar to resilience, right? Right now, it's hard to use. Well, yeah, David, we don't know. Normally, I would take an indicator and play with it for 6 months before I release it to you guys. Tweak it, play with it, have fun with it. This time, I thought it'd be more fun because I need futures data to power it. And I was like, well, we can do it on the test server, but if I'm playing with it on the side in the test server, it's going to log me out of this. And I was like, well, just push it to live and I'll let everyone else play with it. Yeah, no, nobody use it. No, God, no, not yet. Like, just see if it's useful and tweak it, come up with new ideas with it. How's the new site coming? Into January's launch. Oh, it's coming out really well. All right. Yeah, my big account, I've pretty much been doing nothing on this one. And the thought would be it would be more prominent on days that actually had a strong gap. As you can see, like the S&P and most things just kind of like open flat for the most part. So I think I was pretty spot on about the feeling of up and down or down and up. So, you know, this being any kind of downward pressure here, very simple. If this guy like dies out here, I'm gonna skip this bull zone and just let it complete that longer move that I think will be better to do the reclaim. This could be a possible path. So 608 bounce, 680 retest. I mean, the highs become the test. You know, like that works. 36 is that red line on S&P as well. This is oh, we actually hit that 36 red line yesterday. Okay, actually no, 26, my bad. Do I want to chase a short though? Ugh. We'll see on that one. And another thought I had was in a similar sense, to have like a type of indicator that also pulls out the think of it like the closeness it is to the launch point. So another example would be if Nvidia, right, was falling to monthly hedge pressure. Wouldn't it be cool to have an indicator that would tell you the majority of market cap is on hedge pressure now? Like the same thing as monthly resilience, but just that speed of that as well. So the example being like if Nvidia is up here, it has very little effect. And the closer you get, the closer you get, the closer you get to like right here, the indicator goes through the roof. Like, hey, you got some big market cap sitting on top of, well, the hedge pressure, by the way. And if Nvidia were to bounce off of it, this would come down. If Nvidia were to fail it, it would come down. And go negative. So on the back end, it would identify that you got a stock that's like doing this. And this thing would be like, there you go, baby. We got some launch potential there. If this thing took off, then it's like, whew, okay, it took off. If this thing were to die out, it'd be like negative. So my thought was with that particular mindset, you can see all the stocks ready to launch and on the right side of launch point. And man, I really went along the S&P. Holy crap, this indicator is off the charts to the upside. Oh man, there must be a lot of market cap sitting right above MHP. You know what I mean? So the new indicators are made, it'll be positive no matter what. It shouldn't be positive no matter, it should theoretically be negative. I haven't seen it be negative yet, which is kind of alarming me to probably an error in the code, but that used to be a result of the last 2 days of trading. In my prototype, it could go negative. So he could always have coded it wrong. I haven't done a code review yet. Ahmad says I should use a parameter to include all the index stocks that have a certain volume on that day. Yeah. I thought bulls on bottom is a good pivot. Yeah, I think bulls on bottom is always a good pivot. And the only reason, I mean, I could play here's the plan today, actually. For me, just bulls on bottom is a fantastic pivot. Yes, there's that and that. We're gonna hit one of those and turn around. I'm very sure. I could play both of them. They're only 50 points apart, so I could probably put like 2 contracts here and then like fucking 15 contracts here. In reality, I want to see the bigger range, lower lows and lower highs, but you know, lower highs, which is what we got, and lower lows. So I like the reason I said I probably hold off on it because I want to see lower lows. So we already were lower than that yesterday. So I would say that the idea is I'll build a position inside of here, yeah. But I don't think that we're gonna rally off of this. The idea that I have is that if I get here to there, I would be happy squeezing out like 30, 40 points off of that bounce there if I get it. On the other side of the coin, if the market were to go up for whatever reason, I really believe that, was it this 860 level? NASDAQ. Hold on, wait, not 860. Let me double check this. More like 8. I swear I want. Oh, it was 6960. That's where I got 60 from. Okay. So the S&P would be like a 69. Wait a minute. 6960. 6970. I swear I wrote it on here somewhere. Ryan is here. What's up, Ryan? Have I explained this new indicator in the boot camp? No, guys. No. See, this is what I'm saying. Message is hardly ever clear. I got drunk at a wedding. I did like 6 shots tequila, the bride and groom. And I was sitting there at the table with IDOC's family, and they're all eating and just talking to each other, and I was spacing out. Like, and she like tapped. She's like, "Are you okay? You look like something's bothering you." And I was like, "I'm in the zone. I'm thinking." She's like, "Oh, okay, okay." She knows when I'm in the zone, like, back off. I'm doing calculations. And I was like, okay. I got my phone, I write some notes, and I go back to the wedding. But I get home, the minute I get home, I run upstairs and I code it up. So that's as far as we've gone, guys. So when you're talking about, have I put in the boot camp yet? We didn't make it that far. So joke aside, what really is that the idea that we normally come up with something, we brainstorm it as a team, we build it, we test it for months, I trade it for months, then we release it to everybody after we vote that we're going to release it. This time is different. We just released it in a completely beta, unusable, maybe even buggy. Maybe the math could even be wrong in the translation. Just because, well, it needs futures data to power it. And on the test server, it needs a futures data connection. So he can't write and work on it on the test server, or I have to log into that environment to use it, which will log me out of this environment. So I was like, just load it on production and we'll just beta test it live. I should just not said anything and then, but I was like, you know what? Let me let everybody just look at it and maybe you guys can see something I don't. And then, so don't use it for anything. Step 1, get drunk at weddings. Step 2, space out, think about indicators. Step 3, give it to everybody. Step 4, tell them don't use it. That's it. It's here for my testing purposes, but if you guys want to test with me, go for it. I'm watching it to see if it's doing what I wanted it to do. I need to watch it live, so I can't have a test environment open because it needs a futures data connection, which I can only log in one place with the CQG. I could probably get the multi-pass from CQG. They have the multi-pass, right? Lilu multi-pass. But you can like log in at 2 different places. Lilu Dallas multi-pass. Probably. That used to be our pub trivia team like 15 years ago, was Lilu multipass. Nope, half the people never knew what that meant. Multipass. The worst thing right now, like a very morbid fact, is that right now Bruce Willis doesn't remember he was in that movie. Fifth Element, yeah. Poor guy, dude. Dementia, man. To forget you were in like one of the coolest movies ever made. It's like super sad. Yeah, Fifth Element if you guys never saw it. Did you guys do your obligatory Christmas Die Hard, as most people tend to do? Oh, she just turned on the heater. It feels so good. Okay, so right now we're sitting below the open on SPY, right at the open on S&P on NASDAQ, and we're not really. New indicator is barely at 0, like a smidge above 0. There's not much potential, right? So it probably is gonna be useful in days where the actual index has some stretch and stocks have some stretch. Everything was basically flat, so there's not really a lot of oomph to it. But as you can see, it's not getting bigger when the index is coming down. That's a sign the math is right. It's getting smaller when the index is going down. It peaked out and started coming down, which means there's no more upside potential. But also, if the index is trading down and this thing peaks up to higher highs, it's telling you there's a play there. So another use case would be that the index, the futures are just kind of trickling down, and this guy pops really high. It means some stock is right there. and has a lot of potential to move up, which should yank the index up a little bit. And then once that stock completes its move, this thing sort of decays out. So again, my thoughts are incomplete. Like, how can we use that idea? And it's not even looking at the futures price right now. I'm saying you look at the futures price. There's one I built that's going to look at the futures price and just give you a straight up arbitrage number, but he didn't put it in there yet. It's like a divergence indicator. It's arbitrage indicator. Like essentially, the idea is that if the stock is moving here, we calculate how far the stock needs to move to fill its gap. It's a move that hasn't happened yet. We call it implied value. So like if Apple was sitting at its half gap and has 10 more points to go to fill the gap, then the S&P has potentially 10 points of Apple worth of value it can still have to get ahead and catch up. So if Apple were to fill its gap, the S&P, you can calculate what the S&P's new value would be, because it's just the market cap times the difference in price, that implied difference. And then you add that to the S&P and get the new value of the S&P, what it potentially can be. Then you compare what futures are to the actual value, and then you know how much futures are tracking the actual, and then you subtract the implied difference from it to see if futures are leading and lagging behind it, and that's what resilience is. This is taking out a lot of that portion and just looking at, are the stocks on this side or that side of the half gap? And the closer they are to here, the more powerful it gets. So I wanted to see like that portion of the code by itself. So like the idea is if this thing starts to grow really big, you know, you got a launch point somewhere. And if say like we fall to a really strong key pivot and this mofo goes up, then you know there's going to be a pop off of it. No, not how high it's going to go, we don't know. But the thought is I can use it as like a pressure gauge. Like the higher it gets, the more the thing is ready to pop the other way. And vice versa on the lower side. Like it should operate asymptotically to like essentially as stocks are approaching this should like move very quickly. And the minute the stock jumps to the other side, it's going to decay very rapidly. So you're going to have like sort of like that, it'll start to like grow really rapidly as stocks moved here. So right now there's not a lot going on. See how like right here, it like grew really rapidly and then immediately fizzled out. So the thought is, can we have like there's a stretch and the rubber band's about to snap it back into place, sort of thing. Yeah, non-RS people have trouble with RS indicators because they don't work like others. Yeah, they're not price action based. So implied value, right, is actually calculating something that hasn't happened yet, which is kind of neat. So traditional indicators are looking at price action, and what's happening right now is the data. What happened in the past and what happened right now is the data that goes into calculation. This is data that hasn't happened yet. It's where the stocks can go. And so all of my indicators are based on something that hasn't happened yet. So they're future predicting, if that's at all possible. Yeah, that's why people always see our stuff and think up means up, down means down, sort of thing. New indicator name, GPS. It tells you where you are in relation to expect to be in the near future. I kind of like that idea, the GPS. That's kind of cool. But anyways, again, a drunk wedding brainstorm I had, and I was like, let me yank out the the thing that makes resilience flip flop really quickly. Is I was like, I want to make that into an indicator. Stocks are like lined up, sitting at half gap, slightly above. I want an indicator that's going to be positive a million. Like that pressure's there, it's going to bounce. Sort of thing. A pressure valve, yeah. Or pressure relief valve. Like it's starting to build up some pressure, and then the market pops and that thing depletes. Exactly what like Tequila Brain was thinking. And then if it's useful, we can do it with any strong pivot, and similar to like monthly hedge pressure, could do the same thing. The closer stocks get to this, you're building up a pressure on that. And it's already built into the resilience code, but my thought was, let me just isolate that portion of it. The resilience code is this white line here, and this is ripped out of that white line. You can see they're not the same. This is just a piece of that code by itself. But it feels like there's an error. But I could be wrong. Because it's not going below 0. And that's kind of alarming to me. Plus today, the VIX, by the way, is actually strange. It is, again, just like it was 2 weeks ago, the VIX is in perpetual decay and the market still has red candles, right? It's kind of crazy how that's working out. There is no massive selling across the board. This is mostly just kind of the tech stocks sort of doing their thing like they've been doing. So people are rolling out of tech again, end of the year. AVGO kind of flat, Nvidia down, Apple down, Amazon slightly down, Microsoft slightly up, Meta slightly up, Tesla slightly, Tesla flat, Google slightly up. So this is just a result of 2 weeks ago. When Nvidia's down, the index is down, and there you go. So we're back to, you know, closing out the year of Nvidia is the index. VIX is not picking up because not everything else is selling off, which is exactly what you'd expect when not everything is being rotated out of and into cash, and we'll just dump in some Nvidia, jump into some other things. Glad you said hello. How long have I been trading this profit mechanism, Matt? Profit mechanism. I've been trading for 15 years. Rocket Scooter I built in 2019, 2020 era is when I started building it, and it was launched to the public in 2022. So this on my screen I've been using since 2020 myself, and you guys have been using it since 2022. I've been trading since 2010 was my first year trading. Donovan, what's up, man? It says create a set of indicators only when you're drunk, then market them as the drunk indicator set. Oh, that'd be great. But, and then if I price the indicator set, like, you know, like $6, like the price of a beer or something at a bar. You know what I mean? And or you can buy a 6-pack of them. The whole theme is like alcohol themed. They're hilarious. The brainstorm actually came from me like sitting there. I was like pondering. One or two stocks like Nvidia are crashing the index when VIX isn't going up. I was like, we gotta have a counter to that. That's what I was trying to think of. The days that kicked my ass in December, I was harping over it. I was like, it's like, I don't have any protection against the case of 499 companies are rallying. And if one company was 30% of the market cap, and it's selling off, the whole index sells off despite the other 499 companies rallying. And VIX won't even be going up. Is there a way where I can look at the potential that big companies have and really zoom in on that potential so I could see something quick? Was I profitable before I had my stuff? Yeah, I consider myself what I would say profitable is profitable enough to do it full time. Remember, profitable is like your own design. What do you consider profitable? How much money do you need to make to consider? You know, it's not definition of, yeah, you made more than zero. That's not profitable enough. You make $10 for the year, you're not going to quit and go day trade. So when I consider myself profitable enough to take the risk to do it full time, would have been in 2015. So in my endeavors of trading, I consider that personally profitable enough for me to want to take the plunge. And it's not like every single month I was making money either. It was just like, okay, I've made enough in life to this point where I know, okay, I can coast off of this and still have some shitty years. I'm like, let's do this. Can't wait to buy this big flush. I think it'd be good when that flush happens in a little bit for me to also grab something on it. So we'll see. Flat day as usual. The S&P is pulling back a little bit faster than the Nasdaq is actually. So today's support pivots, I would say. Let me go back here quick. $26 down here on MHP. There's also a pocket here, so it'd be kind of nice would be inside of this area, here and here. And some H there. Both of these. This area right here, very useful, I would say, for me to build longs off of this, but not to bet on that, right? But mostly just to grab the scalp. So off of here would be retrace the red line. Kind of like quadrupling down here to trade back the zone in MHP. If you break through MHP, be very careful because this can create a chaotic move like we've seen before. With that same shit of Nvidia just yanking the market down. Just watch Nvidia today. Like really in this environment is when you notice these two things, we'll call it weird environment central. You guys remember, like, I lost about 150K, maybe more, somewhere in this area. Remember, I had like this killer November. I made like half a milli in November, and I lost 150K here. And the funny part is your rando internet trolls were like, Matt lost like 75K this day, and I'm like, I lose more in an average day for me than most people make in a year worth of bag and fries at fucking McDonald's. Like, seriously, these kids are so broke on Twitter. It's hilarious. You know, if somebody's like poking fun at you for losing a certain amount of money, it's only because that amount of money is big to them. Long story short, I got my ass kicked in December. And people are like, oh, he's horrible. He's a terrible trader. Going a 6-week winning streak. Or almost 2-month winning streak. I think it was like 6 weeks. And lose a day, and everybody's like, not everybody, not you guys. Y'all are cool. Y'all have working brain cells, but I got my ass kicked in December, this portion of December. So I was inspired under the influence of tequila to come up with the solution so that doesn't happen again. So that's kind of what happened. Email me regarding hiring. Okay, bankrupt. I'll have to check it out, bud. You know what I mean? I learn from my mistakes. I'm a serial entrepreneur. I own so many businesses and things. I've learned in life that every mistake or every upset, every loss in life is an opportunity to build. I have converted that mentality into so much earning potential in my life. None of my tools were created out of I just want to make an indicator. Most of them are created out of something that happened in the market, and I go, how do I counter this, or how do I build off of this, right? So my thought is, how do I know if VIX isn't going up and people are just rotating out of the one company that's propping the entire market up? If Apple was 80% of the market cap and Apple was dumping, the other 499 companies weren't, the index would sell off. Who cares what all the other indicators say? It just, and if the index has got no volume in this weird environment, no volume relative to what we've been seeing, and it's essentially just tethered to one company, or they're all mirroring each other. I mean, they're not even tethered, but they're just mirroring each other so perfectly. So that one company is doing all the work. Despite the index not crashing out, VIX is trading even lower than yesterday's lows. Yeah, we're seeing lots of red candles, right? So if you saw everybody panicking, getting out all the stocks at once and converting to cash, just say like dumping their stock, going to cash, very rapid introduction of very near the money, or sorry, very out of the money, sporadically distributed near-term puts would cause VIX to go up. Yet people aren't rushing to do that. So therefore, people aren't afraid of this market, yet it's trading down. It's essentially perfectly tracking those high market cap stocks with no crazy volatility to go with it. So the question becomes, can I use a launch point of just that's sensitive to anything? So the little stocks it'll be sensitive to, the big stocks will be very sensitive to. It's sensitive. You know, it's got feelings. It's been writing in its journal for a little bit. It's a little, you know what I mean? Going through those formative years, a little sensitive to stuff like. And will it be able to like tell me very rapidly something's happening quick? Is birthed out of the December sort of painfulness of I need something else in this one specific condition that alerts me that a move has stopped because one major market cap stock has depleted its run. And the idea was that those months or those weeks was kind of like a hole in how I normally trade, because I don't normally like here the market was like up, down, up. It was like going nowhere, but just chopping really quick with no volatility, which is normally going to pick up in the options and such. You're going to see a lot of different landscape changes, but essentially nobody was doing anything. And just a couple of stocks flip-flopping was making it chop very rapidly with no volatility, which is so weird, the no volatility part. So I was like, I need something else. Normally in high volatile environments, you're going to see VIX go up and market's going to trend in a way. It wasn't really trending. It would just sort of like, you would see days like this where it would just go like this, and all of a sudden it would just like, and just stay there for hours. And then at the end of the session at MOC in the last 10 minutes, it's like, and you're like, what the hell? It's not even tradable. You just had to coin flip and get it right. There was no trend. There was no, and I think technical analysts probably got handed worse than I did, because that environment was just so weird. And we really had no counter to it. So, you know, as, you know, traditional, just like a virologist trying to figure out, you know, studying the virus and it mutates. So let's mutate with it. Well, we found a case. Let's find an antivirus for this, because we found something that turned out to be sort of unusual. An unusual sort of trending market case, or like non-trending market case. Just unusual, right? Like, this is an example, right? A couple of days like this, the market just sitting there, and then just plunges, and then sort of makes it back to middle. Sitting there, market just dumps, backs to middle, like dump, back to middle. So the overall trend was actually up, which was weird, but the sensitivity was what made the market move. And I was like, we need a sensitivity thing, that the market is just, you know, like this right here. A little difficult for the average person to use the average tool set to gauge sensitivity, just a few big market cap stocks. So then the wedding drinking was like, let's come up with something to work with that. Woo! GLD liquidity map on GC futures. It should be. Do you have GC futures data feed? Somebody says FOMC minutes today at 1400. Correct. Lars Blade, 100% correct. Some of the selling at the end of the year, I've gone over the speech a million times, but I don't think you've heard it, so I'll repeat it. This was a record year for many money managers who normally, you know, don't pop in 40% gains or whatever in a year. You know, this was a huge year for most people. People that bought the dip in April made a fortune in November or in October. When government announced a shutdown, and we knew we probably not gonna have economic data coming through to support like what the Fed decisions are, Then everybody was like, fuck it, let's lock in my gains for the year, take risk off the table, cut the losers out of the portfolio, take profit on the winners, and then lock in. And I can brag that I made 40% this year. Boss gives me a huge bonus, and I don't have to risk anything till Q1. Why would I? Why jeopardize that? So with the government shutdown, people just started locking in a bunch of tech and taking that money and throwing it into gold and silver, because that was being what was hot. And then they're just riding the year on that. And that's really what we saw when the government shutdown is really what caused the market just to stop. And then people locked in profits and they're saying, whatever, we're not gonna do anything till Q1. And that's been my thesis ever since. Government turns back on, people aren't gonna come in and say, oh, I made 40%, let's try to go for 43. And then risk, you know what I'm saying? So I 100% agree with you. This is just money managers chopping out. And I would say not only just getting rid of losers, but getting rid of just dumping Nvidia and some of these bigger companies. They rode that wave so good, and they're just taking profits on some of that stuff because that's where the sensitivity is. Any news event related to AI right now, the market's jumping really quick because this is last minute decision of firms like, yeah, we want to get some Nvidia on our books, and firms are like, let's finally take the profit on Nvidia. We've been riding it for too long. And so you're just seeing like the shifting around of that at the end of the year. And it's like so sporadic because it's just a few actors. Like somebody's like, I got to dump this by the end of the year. All right, today's the day I'm going to do it. We popped. All right, I'll dump it. And so you're not seeing everybody all at once moving. You're just seeing a couple people moving a couple of big things. And those big things weigh so heavily on the index. The index is responding to it because nothing else is moving. Nothing else is rallying or selling off. So the index is like just listening to whatever. The only thing that moves is moving really big. And the index is like, oh, fuck it, let's go. It doesn't have 100 other things moving the other way. People are mostly dumping stock and not rotating into other stock. We were seeing that. People were dumping stock and keeping cash and moving it to gold, which is why the S&P was so sensitive. Normally it would buffer that move. People are dumping Nvidia and buying ExxonMobil, dumping Nvidia, buying Goldman Sachs or whatever. You would start to see the index would not be so sensitive because they're moving money from one stock to the other. The index market cap total would relatively stay flat because they're moving from one stock to the other. But people are actually physically moving one giant stock in amounts of cash, which made the market very, very sensitive at the moment. So the question was always like, where was that cash going? And like maybe they're just taking profit for the year and then stockpiling it and then, you know, chilling, and then they're going to wait for Q1 to try to build something in their Q1 books. And then I was like, well, maybe the more plausible explanation is, bro, you made 50% Nvidia this year and gold is rallying through the moon. Yeah, let's just sell some of that and jump in this gold thing, which I really personally think is the final. Like if you asked me to like go on CNBC and talk about what I think December actually was caused by, that's my speech. I've now added gold and silver to the mix. You're going to free up some money to jump in on this year's tulips, then you better, what are you going to sell? Oh, the one thing that people say is in a bubble that you made 50% on this year, you're probably going to dump that. But not everything else. You free up some cash, well, the thing that inflated the most like crazy, might as well just take some profit on it. And I think that in the government shutdown and kind of the fears about, you know, whatever, it's just people lost interest in buying this and they gained interest in buying this. So the fact that the money, you know, and just one stock rotated out and people were jumping into like gold. I mean, if you think about it, like the minute Nvidia peaked in late October, gold and silver were just like starting that like rapid ramp up. Right here. So if you look at gold, right, the minute Nvidia started selling was the minute gold started rallying that last wave. I mean, it makes a whole lot of sense, right? I mean, it's almost like tit for tat. The peak of Nvidia is the base of gold and this last wave up. Some last minute folks are like, shit, we get some gold on books for the end of the year. Is this maybe, you know, like I said, I'm a street economist. I speak with the logic of how I see things. I could be missing the mark on a technical sense of describing with actual terminology I need to, but the way I see the numbers, it does make sense. Does this make sense to you guys? Is maybe plausible? I don't know. I don't know. Do y'all buy into this possible theory? that people are like, let's take profit on this and put some of this on our books by the end of the year. Y'all think that's true? October 29th was the high of NVIDIA. October 29th was the low of gold on this last run. I feel like people are just, let's take out of AI, let's put some of that shiny stuff on the books. And so that's where I think happened. And so now you're seeing the opposite, just a little bit of gold profit taking a little bit of rallying in the market. So it's kind of like people are just, the few people still trading this year being wishy-washy and jumping on what's trendy. Is my armchair analysis better than most of the idiots on TV? Well, I call my street economics. Like, you know, I'm playing street ball here. Like, I don't have real rules. I don't have real terms. I just describe it the way that I see it. You used to be a money manager, Lars? Oh, cool. So clients get rid of losers, take profits late in the year. Some rotating the highest dividend paying stocks as they get older. Their clients buy the next NVIDIA. There you go. Well, the arbitrage indicator never dropped below 0, which is interesting. We're still comfortable up in this area. I still think that, like I said, any selling that we're going to see, I think is going to come from, let me actually, so I can't show, I'll do it on Thinkorswim really quick. But yeah, but I really think that that's what happened. Yeah, people were selling losers. Yeah, right. But there were no losers, right? Like at the end of the year, nothing was losing. So to go with what you're saying, Lars, like, and at the end of October, there was not a single loser to be had. Just about every single company was close to all-time highs, right? Around that time. So to go with what you're saying, people were probably selling losers here who got in at the end. But I would say, like, right here, the idea that you have government shutdown, no data, no bull data, GDPs or CPIs to propagate further bullishness. You're like, oh, I'm going to be in the dark for God knows how long. Just might as well just move some money into something different. And I thought that, like, right back here in October, people were like, yeah, let's just take profit on the big stock rally. I mean, we did buy the Nasdaq when it was 16,000. Now it's 26,000. So let's just take a little bit of, let's just, you know, take some stocks off the table and buy some gold. Now we're good. Gold's the hot thing. And the timing of it looks really, really right. And I would say, like, if I was getting ahead of a money manager, I would say that would make a lot of sense, right? Yeah, you do a little window dressing at the end of the year. I get it. Put some like, this for the most part could have just been gold window dressing. People like saying, hey, I want to make sure I got gold in the books. All my customers are like, you get in on that gold rally? Buy some gold today. Yeah, we did. Oh yeah, we're totally in gold. Yeah, wait for the prospectus to come out. We got 10% of the portfolios in gold right now. Totally. They're like, how much gold do you have? Just wait till the quarter. We'll report what we got. They're just, you know what I'm saying? Like a little bit of gold window. Tell your clients, oh yeah, guys, y'all keep your money here. We got in that gold thing. Don't you worry. Whole quarter 4, we've been in gold whole time. Anyways, there's my street ball in there. But in reality, I think that the pivots line up pretty well to see that there's just money shifting out of some AI, money shifting into some other hot stuff, and essentially just a few speculative firms are like moving to the hot thing. But you're not seeing everyone dump everything else, because like my case study on this was, I kept pulling up the J&J chart, which I was like, you know, as a general rule of thumb, when NVIDIA and Apple and some of the stocks were like dumping since October, for whatever purpose, Johnson & Johnson continued to rally. And that was my case study of, well, I don't think everything's selling off. So I was like, okay. So you would think that like an average sort of like, you know, upper middle tier company like this would also be sort of like peaking out. And if people were sort of like losing appetites or something, I was finding stocks like J&J that were continuing to rally to all-time highs during the time that NVIDIA was dying out. So it showed rotation also in the companies that weren't tech. So I was looking for that evidence as well, just to prove that we weren't crashing the market. So like, people got an appetite for something somewhere if they're jumping in to something. Like the minute, you know, October 29th was that pivoting moment, and October 29th was the low of Johnson & Johnson as well for 2 months. And so or for a whole month. So I looked at it and I was like, people are really just taking profit on tech and putting it somewhere else. Yeah, high dividend paying stocks or gold or whatever. So this was just a very sensitive rotation and nothing more. When everybody was like calling for bear market and crash market, I was like, nah, there's just like low participant rotation out of some big things and into other things. But it's not like everyone's doing it. So the market's just going to be sort of fidgety, but also slowly, like the average is going to slowly move, maybe slightly down because people are taking money out of stocks and going into gold. That was my whole theory as to why the market would like go slightly lower into the end of the year. More cash is leaving stocks and going to gold than there's cash entering stocks. So we would slightly pull back until the end of the year because of the whole gold thing. Money's just moving out of stocks, but money is rotating into enough stocks like J&J and other big stocks to continue to keep the market from crashing, because people still want to buy, or sorry, the S&P and NASDAQ from dumping too hard because people are still buying other stocks, like huge growth, right, in some companies. So what Lars is saying is correct, right? People are just moving some money around, and giant red candles, indicator never went below zero. Maybe that's a good thing. Market bumped and rallied again. Nvidia just jumped above MHP? Probably so, because MHP res just jumped. I would agree. Nvidia popped above MHP, so you can see right on this level right here, we had a quickie little bump from 38 to 53 on Nvidia. Oh, what I was trying to show you guys earlier. So I think we go closer to like maybe 830s on NASDAQ, something like that, before we turn around. So let me tell you what I think is gonna happen today. Literally about here. We're gonna get to there and we're gonna close here. That's what I think. Why do I think that? Because there's nobody really doing much. I mean, our stream has like 300 fewer people than normal. Everybody's stream has hundreds of people fewer than normal in the holidays. So I'm gonna use that as a data point to say I don't think a lot of people are working this week. This market's gonna stay on its trajectory downward. Um, 69.70, 65, give or take, like this. Yeah, so maybe I literally think like we're not gonna break 69.70. PD ratio is still 72%, so we're still solid on the bull side. There's been the speculation of a market black swan or huge market crash. I don't see any evidence of it. One thing that you can tell is that speculation of a black swan or event would have to be something that caught everybody off guard. Like the last thing that caught people off guard probably been like the flash crash of 2015. Market was just steady, and then crashed for 4 days. It caught everybody off guard. And right now, there is no evidence of fear in the stock market because VIX is in a perpetual decay. Either everybody's sleeping at the wheel and there's some brewing black swan event, or there's no black swan event. Right now, a black swan event is triggered by unforeseen force. Somebody dumps a large amount of something and it triggers a snowball effect, right? You can never predict that. I think somebody in chat just saw somebody say you can't predict black swan. Oh, it's Ice Wild say you can't predict black swan event. But you can predict as it's happening, it's gonna keep going, right? you can see the response of what happens, and you can see that, oh, we broke a key level. This day is going to continue to crash, sort of thing. And you can see it as it's happening, but you can't really predict it. Right now, nobody in Wall Street is planning for Armageddon. The easiest indicator that you have to tell you this, two indicators, the VIX and the VVIX, will indicate that Wall Street's sitting comfortable right here. The VVIX is the sensitivity or volatility of the VIX. If VVIX is below 100, the market is comfortable where it is. When VVIX is below 90, the market's in a fucking utopia. Like peace, love, and harmony. Below 90 VVIX, the VIX is going nowhere. It has no, people aren't even touching vaults. Like they're not even, nobody's moving big amounts of money into near-term SPX options within the month window it looks at. So what you're looking here with VIX in decline like this, nobody is scared of this market. So nobody is planning for a black swan event en masse. People are sort of just, again, it would be like, are they just asleep at the wheel? This is by far like utopia conditions. It doesn't get any better than this. This market tried to sell off, and I bet you there's a million people shorting at the bottom, and the market's not going anywhere because it's not volatile. And so my thoughts on that are, you can't plan for a black swan event. It can happen at any point. Is the market tightly wound and sort of just sitting still in fear of a flash crash? No, it's not. There is still such demand for, so like the Johnson & Johnson example. There are so many people buying companies even now at all-time highs that they're not afraid of it at all. And it's not really a bubble because there's really good reasons for this company to be rallying, right? You can talk about a lot of reasons companies, but I mean, there's just genuine interest in the stock that goes from 180 to 215. That's genuine demand. Typically, like the black swan events, if you can go back and study what caused a flash crash, you'll see the environment was like a choppy flat market for like a whole quarter before it happened. If you guys were around for that, I was. It was way back here. This one right here. Okay. This is like right when I went full time. This is like the first year I'm full time trading. I'm streaming on Zoom at the time. So the market was like winding up and going nowhere for almost 3 quarters, like basically. And it was also showing like instability. Some people are like, the market's kind of peaking out and topping. First of all, you had that September, October sort of like big nasty sell off here. Then the market was just kind of sitting there in tight. It started tightening up, which was crazy. Volatility, then tight, and then started showing signs of instability. And then it just triggered like a year worth of stop losses, right? Which is really what wound up. You can't really predict this, but the idea is when market winds up tight and everybody's just sitting on their hands, they're not scared of it, nothing's happening, then the market starts to sell, you trigger stop losses. People got to rush in and react very quickly and cause the event. So it's not predictable that event can happen because we had, I don't know how many hundreds of red candles that looked exactly the same, not even as bad as this one. I mean, we had some worse red days than this one. Somehow that was the day, the start of the next day triggered that event. We chopped through 6 months of lows in a single day. And I bet you everybody was so wound up and all their stops got triggered and all those puts got thrown in the money that people had to rush in and sell, and there was no buyers to counter it, and the market just dumped. And you can't forecast that, unfortunately, because that looks like the least suspicious thing ever, right? So I love talking about this because this would not have clued me in. I would look at this and not be like, hold on, let me see, there's my trade. No, nothing yet. I would look at this and wouldn't even be scared of it. I'd be like, yeah, it's just it's another day, another down day. You wouldn't know that day was the day that started the whole thing. It looks very mild. It didn't even break previous week lows, right? There was some bigger red candles, much bigger red candles in the last year. And so this is not suspicious at all. Oops, that's the day. Sorry. The small one here. So in reality, now let's talk about the fundamentals. I think personally the black swan event is coming. Absolutely not. Because there's a fundamental reason people aren't afraid of this market, and whether, again, it makes people sleep at the wheel and then one large firm decides to sell everything or something crashes, or goes bankrupt, then that can trigger the event. On its own, people are so enthusiastic about 2026. It's not even funny. The Fed's 4 major talking points from their December projections, their mandates they look at, they turn their dual mandate, is their inflation numbers and unemployment they're looking at now. All 4 of the things in the projections report, GDP growth, unemployment rate, PCE and non-core PCE, core and non-core PCE. Those 4 things are all expected to improve in 2026. GDP number especially, we expected 2.3% growth on a, in September projection, estimated 2026 to be like 1.8. December projection, in just a 3-month time frame, the projections went enormously through the roof. 2.3 is massive growth on GDP. So that portion of that is economic growth to support bullish market. The bulls will be immediately stepping in at the beginning of the year, grabbing whatever they can off of that data. PCE is expected to come down, core PCE is expected to come down, unemployment's coming down. We all thought tariffs are going to cause a recession. It yet seems that the economy is forecasting better numbers for 2026 than we've had in a decade, right? So the enthusiasm for the bull market is there. Now, whether that makes people asleep at the wheel and the market doesn't go and somebody starts selling and triggers something, I don't know. Somebody put in chat, we're trying to invade Taiwan tomorrow. Yes, some kind of event could trigger it. If you could plan for a black swan, people would be able to do it and it wouldn't happen. That's the thing. Black swan only happens because it catches people off guard and they have to rush to do something. They're getting stopped out. They got to throw puts on the table, which forces put sellers to jump in and short further. If people knew something like that was going to happen, they would distribute that knowledge throughout the market, not immediately in one time and place, which is what causes the event to keep going. If everyone says there's a black swan coming on October the 20th, get your bets in right now to protect. People will start hedging throughout the market. Like it'll start to slowly build its way in and have no impact at all. If some firm was like, hey, I'm going to sell $1 trillion worth of stuff in 1 month time, everyone would be hedged and positioned and ready to catch it. And the market wouldn't move. 100% would stay still because everyone's prepared and hedged for it. But if someone just dumps it and catches people off guard, then the event is caused. So the fact that the event happens is proof that you can't predict the event to begin with. Or else the actions taken to hedge against the event would prevent the event from happening to begin with. It's like going back in time and killing your grandpa prevents you from going back in time to begin with. If everybody's perfectly hedged, perfectly balanced, they knew how much was going to sell, they knew how much the S&P was going to fall, they made sure their stops were there, everything was adjusted accordingly, they bought the dip at the right spot, then the event itself wouldn't happen. It would be arbitraged out of existence as people just knew that no one else was selling and only one person was. They knew where to grab that liquidity. They would inject that liquidity with time being. Market makers would grab the entire lot at that point in time. And so that's becomes your proof that you can't predict them because they happen. Being able to predict them, you could essentially, the actors of the market would prevent the event from going out of control. What do you think is causing economic growth and health? Is it AI? I think it's the lack of inflation. I think that growth was always there. Less unemployment. AI is destroying jobs and creating jobs at the same time. It's kind of neat. AI is spawning like a whole industry of jobs. People using AI to do all kind of stuff. The world's becoming more efficient because of AI as well. And I would say that the growth is mostly, growth is usually comes from 2 places, right? Either A, companies are selling more shit and people are spending more money, which gives people more money to grow, or money becomes easier to borrow, which also creates more growth. So credit and GDP are like the two main thing. Again, the street economy here. I just know from the streets how to describe this. So the two factors of what go into the system are the system has more commerce, produce more, make more, sell more, people buy more salaries, more jobs, more spending, more salaries, more jobs, more spending, more salaries, more jobs. Your traditional, Ray Dalio explanation of how the economy turns in a circle, right? The second thing is, I say borrowing. If credit becomes very easy to acquire, becomes very cheap to take on debt and things like this, more people will do it. And therefore, it's how much people are spending plus how much people are spending beyond their means, which is credit. So the net sum of growth in the economy is those two things, the way I describe it. So all growth has come from inflation. Well, I mean, dollar for dollar inflation, things always grow because of inflation, 2% a year. If you factor in the disinflation and the local time frame, it makes it cheaper for people to buy stuff, but you have to factor in on also are people buying stuff with cash or credit. I think what happened is post-COVID world, COVID created a weird environment where prices were really expensive and people drained their savings to survive when they couldn't work. And shortages made things go up in value and people bought all these assets that no longer have that value. So basically from 2020 until now, people are just upside down in life in general. But for some weird reason, they still have their jobs. And they're able to just slowly dig themselves out of the hole. Remember, COVID happened, you lost your job or whatever. Or COVID happened and you got laid off. Or COVID happened, you're at home working, going in Zoom calls. And interest rates were really low for a house. But prices were going up. You wanted to get in on it. But because of inflation, you told your boss, you got to pay me double or I'm going to go work for this guy that'll pay me double. So everyone pays everyone double after COVID because that's just what happened in this weird world. So you had twice as much money and you bought shit that was twice as expensive because of the shortage. Therefore, you're sitting on, something that no longer has that value, like a house. Nobody's going to buy the house for the price you paid for it, but you got a low interest rate on it. So you're coasting. You got the lowest mortgage in the world for a house that's going to be upside down for you when you sell it. You pay no interest on that mortgage. So now you've got like this weird situation where people have locked into buying really expensive shit that is going to lose all its value 5 years later, 10 years later, 20 years later, because they bought it with low interest rates, right? And so on top of that, people drain their savings, max out their credit cards to live if they got fired. And so the last 5 years, people have been sort of like digging themselves slowly out of a hole and not really like, participating in commerce as much. You're kind of upside down in a house. You're kind of upside down in a car. You're not really. And so 5 years later, once that inflation started coming down, now it's like, okay, now I can maybe go buy my next car or something. Things are starting to speed up now because things are becoming less expensive and credit's becoming easier to get. So now people have finally paid off all their credit cards and finally amassed the savings again. And now people are like, okay, let's get back to spending it. So I think that COVID just kind of dented people's ability to spend money and borrow money. And now we're kind of getting back to that starting point of, hey, everybody, open up a credit card. Let's go. Money printing kind of environment, credit printing environment. Yeah, so you bought the same quantity of stuff, so no growth. Right. So the inflation you're talking about, that portion, yeah. But why we're growing now is simply because people are able to finally spend money again. People finally have expendable cash again. The disinflation is helping with that. Credit is easier to get these days than it was 5 years ago, right? So I think people are just participating in commerce more. People are able to have extra money because they're not getting laid off and economies are just growing and just a normal growing period. But what I differ with a lot of people is a lot of people feel like this is the top, and I feel like this is the start of a 5-year, 10-year boom. Like this is for me, this is the starting point. The S&P in 5 years will be at least 12,000, 10 or 12,000. Like the S&P is going to almost double in 5 to 8 years. That's my thought. This is the start of an economic boom assisted with AI. So 2026, I think, will be a very strong rally. I don't think there's any... I don't think for a second somebody said AI is in a bubble. Yeah, not at all. Like, I don't feel... No, AI is... The bubble comes from the fact that, you know, so many people have invested into it, there's nobody else left to invest in it. So the bubble stops growing, and then the first profit takers deflate the bubble, which squeezes the latecomers, which squeezes the next latecomers, etc., and then the bubble pops, right? Right now, I don't think there's anybody betting against AI like it's not the future. I mean, it's like the money managers who are like 60 years old right now were 40 years old and made the same mistake in 2002 and 2003. The internet's a fad. I don't want to get in on this. Stupid. They got laughed out of their office in 2004 when everybody's like, you should buy the Facebook thing. And he's like, isn't that like MySpace? That thing's going to crash and burn. They got laughed out of their office back. I think they make the same mistake this time around. Call them, oh, Internet Joe. They got nicknames for all the guys that were like, the internet's just a fad. Oh, we got old Internet Joe over here, pedaling his feet like the Flintstone when he comes to work. Don't think the internet's going to take off. Oh, now he thinks AI is not going to work too. The fund managers are going to make the same mistake twice. They can't wait to go all in on this shit. You know what I'm saying? That's my thought. You got all... You're gonna run into the conference room again. Hey guys, I promise. I know I said internet was a fad, but AI thing, it's a bubble. We got to get out of it. Why do we still let old Internet Joe work here? Are they gonna fire that guy or what? You know what I mean? Here we go. That's at 800 level. Let's go. That's slightly, I think 820, 830. Because it has such massive utility already, it's like the potential is there, and it's not like a bubble would have to have some kind of mechanic that's irrational to keep inflating it further. Like the housing bubble's mechanic was that people were able to get house loans without having their credit being checked, right? Okay, these are mechanics that lead to a bubble. It's an exhausting moment where something irrational is propagating it further that can't survive. And right now, people just buying the stock and holding it. It's not like it doesn't have utility to support what it could become in the future. So it'll be the most expensive bridge to nowhere. I mean, I don't know, man. Ever since 2024, 2025, and 2026, the amount of emails I get per day that was like 5 to like 10, and now it's probably like 25 in my spam inbox. Hey, can I make thumbnails for you? Hey, can I make videos for you? Hey, can I help you with this? Hey, can I make this for you? Hey, I redesigned your website. Hey, I did this. I get this shit all day long, and it's all somebody fucking chat GPT. Hey, take this guy's video and make a 10-second clip, and they're pitching me a service. Right? I got MFFU TV. Yeah, in an hour. You know what I'm saying? Like, dude, I can get 25 emails a day of somebody using AI to pitch me a job that they have to do something for me with AI. I redesign your website. You know what I'm saying? Like, I get like 20, and it's like so many entrepreneurs out there are utilizing AI to build some kind of business of their own. So let's see if I can't, let's just have some fun. My little indicator is decayed on this sort of pop to the top. Let's just have some fun and try to short this back down. From 800 level. I think I might be early on this because my original calcs was probably 820. So I'm just gonna, like, I'm gonna tap it with the 2 spot, nothing at all. So what I really think is probably like 820, 830, and then we finish off the day red. That's my thought. Yeah, I don't think AI is anywhere close to being in a bubble, but because it's not like unwarranted that it's got value. You know, there's massive potential, and it's creating jobs. Like, that's the craziest part. You know, Pets.com wasn't creating any jobs. There's like some kids that made a website in like the era of like low speed internet that didn't really have anybody using it. And so the investors, like hedge funds and investors, private equities and all this stuff, VCs were like propping up the values of these companies, betting that they would become something. And they did become something just 15 years later, 10, 12 years later, when the internet sort of like took off. I would say you can thank Facebook for the internet taking off in popularity. Facebook brought people to the internet bigger than anyone else did. And while they were on the internet, companies like Amazon and others took off because now people were stuck on the internet. Now they lived their lives on the internet. So you were right betting on the internet, but the utility wasn't there until Zuckerberg made it happen. And so right now the AI utility is there. That's the thing. We're not like in a cycle where I think that like 10 years of, you know, the internet sort of world was built on the idea that internet's going to be the future of your life. But then like you had to sit there, hey Bob, I'm going to go on the internet. Honey, I'm on the phone. Mom, get off the phone. All right. All right, Grandma, I'll talk to you later. Mom gets off the phone. You dial in. Beep, 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 beep. And you dial into internet. 10 minutes later, you're finally connected. Hello, you got mail. And you get in there. Your mailbox shows up. You go to AIM, chat with your friends for a little bit. And they're like, oh, man, I want to order something online. I want to order this like... I want to order like a video game that my friend said I should get. Let me go online. I gotta go to a website. Okay. Enter. Loading. Okay. Loading. Okay. There it is. Oh, they have it. Click. Loading. Your mom's like, can I get back on the phone? Hold on, Mom. And you're sitting there like waiting. And it's like, okay, now I'm going to check out. I got to put in my credit card information, type in my address, all this. God. Mom, can I borrow the credit card? There's all this like hurdle, right? And then you finally go to check out and it's like, we'll ship to you in 2 to 4 weeks. Fuck it, I'm gonna go Walmart and buy it. Okay, this is what it was like 20 years ago. And you're like, whatever, I'm just gonna go to Walmart. This is a pain in the ass. I'm gonna go to Walmart. I'm gonna buy it. You get time to log into the internet, type in all your stuff. The convenience of the internet was gone. ICQ, yeah, I still had, I was a huge ICQ person. So you met your wife on AOL? Oh, that's hilarious. Was your first comment to your wife ASL? Don't you ask your wife? Like, hey babe, ASL. Oh, sweet. We live in the same city. Let's go. So these Gen Z kids are like, what are these fucking boomers talking about? ASL. You don't even know. Imagine when you got your internet out of a disc that came in a magazine, or you went to Blockbuster to rent a video. You don't even know what that is. And you got 200 hours of internet. Yeah, you had the internet, got budgeted, you had hours of internet. Put the disc in, minutes. You get free minutes, so you had to pay for it. And nobody wanted to pay for it because you kept getting free CDs all the time. And every time you go to a chat room, you ask somebody age, sex, location, ASL. 25M, Houston, Texas. That would be me. Or at that time, 20, right? So, yeah. So anyways, nobody liked the internet because it lacked the utility, the high-speed connectivity or high-speed internet, permanent connectivity, convenience of purchase, convenience of shipping. None of it was there to support internet world infrastructure, and it all crashed and burned because in 2000, no one was getting on the internet to buy stuff. It just wasn't a thing. But once Mark Zuckerberg and the powers that be created your home on the internet, the Facebooks and Instagrams of the world turned the internet into your new home. And then PayPal, like Elon Musk, PayPal, right? These companies are what birthed internet culture. PayPal made it super easy to buy something. Amazon made super easy to ship something. You know, those things were necessary for the internet to have utility. And then it took 15 years for it to become what it is now. But AI, though, it's got the utility now. It's got the usability. It's the simple of use. Everyone's using it. People's creating jobs. I don't think it's at all in that phase of it's going to crash and burn, because it's doing something right now. It's like in 2000, if you didn't have to dial into the internet, it was already high speed. You didn't have to put in your credit card info, and something would ship to you, order it this morning, ships this afternoon. You know, then the internet would have been fine, but it didn't have high speed connection. It didn't have people using it. It was hard to use. It was clunky to use, and people weren't using it. So then the bubble popped because it got too far ahead of itself. But it wasn't a bubble because it just inflated to where it wanted to be, which it took 15 years to get there. The question is AI lacking severe amounts of utility to support the valuation it has now, and I don't think that's the case. I think it's a whole different story, because you're seeing, I mean, I tell you, like, I used to get 2 years ago, you're like, let me redesign your thumbnails. I use AI, and I'm like, huh, how does that even work? And now I've got 10 AI apps on my phone. I can do it myself. Now it's such a commonplace thing. It actually has the utility that everyone's using it. So I feel like it's a different story, right? Remember, you had to actually type www to go to a website, or even before, they had to type the whole HTTPS : // You had a 3-letter username on AOL. You were L33T. No way, dude. You were the first elite on the internet. That's a lot. You could probably sell that screen name for some money. Yep. The powers that be, Elon Musk and Mark Zuckerberg and Jeff Bezos, the three of them created, and a couple other people, obviously, but those are like the godfathers of your life on the internet. They created, somebody said, a whole new world in social media and shopping. Between the three of them, they created a community for a reason for you to be online. It was Mark Zuck. They created convenience of purchasing, which was PayPal. You finally, you put you just one-click checkouts, right? Super quick. And then Bezos was like, I'll get it to them by tomorrow. I'll ship it to them tomorrow. Let's build 1 million warehouses. And Steve Jobs had a large impact in your life. And then, yeah, and then Steve Jobs obviously was the other part of that earlier on, creating the ability for you to carry all of that shit in your pocket. So, yeah, the four of them, I think, would be credited for the whole entire caboodle there. AI will become a national priority. Security between USA and China. It will grow no matter what. Will the valuation hold? That's the real question. Spike is on point there. It will grow no matter what, but the question is the valuation outpacing the utility? And at what point do people decide that that's the case for them and they take profit and it dumps? That speed indicator new? Yeah, we're testing it out to see what's up with it. So is it Elon Musk? What about Elon Musk? Remember, he made PayPal. It was that was a huge deal when it came out. It's sort of like the idea was, back in the day, why would you spend 20 minutes to buy something and then wait 2 weeks to get it when you could just drive to Walmart? These days, people are like, drive to Walmart? That's like 5 minutes away. We just order it and it come to me by tomorrow morning. Totally fine. So the shift of like our patience has changed. You know, you like this internet ships in 4 weeks. Just go buy it. I'm gonna go to Target and buy it. I'm gonna go to Kmart across the street. But the same as the Michelin restaurant guide, they made it for people to drive to them. Oh, dude, Michelin sales must be down. You know why? Because Houston never had a Michelin star restaurant. And just this year, they've got like 20 new ones. A bunch of big gourmands, but they got like 7 one-star restaurants. Hold on. Michelin Houston. Let's see. Houston Michelin restaurants. So, yeah, like, you know, the Michelin guide, yeah, it was clearly, you know, the rules of the guide were like, what, 1 star means you drive out of your way to go to the restaurant. Has nothing to do with the restaurant, has everything to do with driving. We all found out the Michelin guide is designed to drive more and wear your tires out faster. Very smart. Just like the Koch brothers, I'll probably get, by the way, I just letting you guys know, I don't plan to kill myself with 2 bullets in the back of the head when I tell you this. But the Koch brothers, you know, those oil billionaires in Houston fucking shot down public transit systems with all the money they could because they didn't want you using efficient energy used vehicles. They wanted you to buy more oil and burn more oil in their cars. So they shut down almost every attempt for Houston to have some public transit. That's why we have pretty much no public transportation here in the city. So anyways, I don't plan to off myself in case I leak that information out there. But yeah, like we have like a light rail that takes you to the stadium and that's it. Nobody uses it. Anywho, but now the Michelin guide somehow, look, Houston had nothing and now it has like this much. A lot of these 49 restaurants now. I think like 7 of them are 1 stars. Hold on. How do I filter? Oh, I've been to most of them. They're all pretty good. But it's like, you know, the Michelin's got to get you driving some more places. And that the place where people drive the most. Like the dumbest decision in the world to not have Michelin-starred restaurants in Houston. Nobody drives more than people in Texas. This is like the driving, commuting to work capital of the world, this place. I'm telling you. Have I seen Tenacity Trading? Dude, people keep coming in here and typing it. Y'all keep asking about, do you work for them or do you know these guys or what? You asked me that yesterday, I think. Are they pitching to you? Where are you seeing them? Do they have social media? That's my question. And question number 2 is why have they not reached out to me if they're trying to make a presence in the space? Give me a whole phone call and talk to me about their stuff. Haven't. Do you have it? I'm gonna check them out. This is like, I've heard the name has popped up like 10 times this week. That was in Dallas. I'm in Houston, bud. Wait, you're in Humble? You're IH, bro. And you're FX golfer? Bro, all my friends, we play golf. You got to come out with us sometime. You need that Mr. Garrison bike? Yeah, we do, right? Yeah, no, it wasn't you yesterday. It was somebody else. People keep asking me about it. That's why I'm curious. Are they like marketing or something? Where are you guys hearing about them? So I used the indicator a second time, right? Market popped and the indicator decayed, so I jumped in on the short. Oh boy. That's the second time I made a trade on it. I just got 2 contracts. 2, I wasn't even doing anything heavy. You love the golf club on Houston? Oh, nice, nice. That's a great area. You're up for business in January? Okay. I explained the speed indicator thing earlier on in the video. Like early when the stream started. Here I am just trading 2 contracts. I didn't touch it in my fund to next. I was thinking about it, but I was actually waiting for some higher highs. Dude, this was great. Guys, look at this. Look at the indicator. Look at this. Hold on, look. I was hoping for some usability like this. Watch the bottom. See the bottom? Ready? Big green candle. Big green candle. And this thing was decay. Pretty fucking cool, right? Let me take profit at half cap on that one. That was pretty cool. This is the second time it's leading indicator potential. Y'all can't unsee this. Ready? Rally. Pop. Indicator decays. 2 minutes early. GPS. That's I was like, whatever. Let me just short it with 2. Just see what happens. We pop back to half gap, positive res. I closed out. Decays in other areas and market goes up. Right. So the point is you're looking at exhaustion moves or bigger moves, not just, don't look at it like the oscillating portion of it, right? Like the idea is, can I pick exhaustions and such out of the market? So an example would be Right. So you can see like here, right? The market went up and it wasn't really like drastically at this point. Okay, just a little bit. And that's a good question. Can we isolate certain times when it's good and certain times when it's not? I think when you get like a high volume exhaustion kind of candle move that breaks highs or something, can I use that to tell? So an example is here, now it's growing again. Right, it's still in the usability phase. Maybe I just got lucky 2 times in a row, but let's see like how useful it is. Because it did this 2 times today as well. Like, right here, it was pop, 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 and then it started pulling back right here at 52. Pulling back, pulling back, pulling back. And then that's where it peaked out. Remember, it only goes up when stocks are close to half cap. So that's kind of the whole point of it, is that it could be a usable thing. Obviously, it's going up again because we're falling back to the launch point. So the idea is the futures have overshot while stocks just fill their gaps. And once stocks fill their gaps, the indicator returns closer to 0. That's the rule. But this is really kind of hard, and I think it's going to be choppy and weird because this is a flat day. I might just have gotten lucky on these 2 trades. Picking the right timing. Because in a flat day, we don't use resilience to begin with because of that activity. It's kind of like choppy. And that becomes the real question. Yeah. Why don't do silver? I could. I just don't. I mean, when you trade a different thing, it's like taking on a second job. It's twice as much you got to go learn about and monitor and learn about the market and stuff. Oh shit, we get some giveaways, you guys. How did I forget? All right, I kind of want to keep shorting this though. Bum, 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 ba-dum, bum, 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 bum. So you can short a half cap here, almost negative res here. Give me a quickie little pop. I'll play it one more time. Yeah, let's take it to the bottom. Yeah, I think we're gonna fall and just stay low today. I think the play here is to there. Oh, not futures S. Sorry, my bad. Today's first giveaway. I'm so bad at this. My bad. ETF, baby. Let's go. Let's roll it. Oh, I got some text messages. Oh, hold on. Okay, so okay. So I'm opening 2 new businesses. We're trying to. Give you guys a few hints. Really quick, hold on. ETF, baby. All right, type it in. We're gonna do some little giveaway action here. Oh, oops, wrong song. Okay, anyways, I want to hear the P&L song anyways. Trying to open 2 new businesses this year. A fitness franchise that doesn't exist in Houston. That would be huge. So try to open the first one. We got the meeting with the owner again. Or the next, sorry, the company again. And we're meeting the owner this time. Talk about franchising the first concept. We only want to franchise like 3 to 5 of them in Houston. And be like the Houston branch of that one company. And so we're talking about the first one and doing the logistics. And we even talk about maybe opening 3 at once. Never done a fitness thing before, but I'd actually really passionate about it. So we'll see how that goes. All right, Phil, 820. Congratulations. All right, good job, good job. We'll give away, let's give away a second one of these. Why not? We got plenty of these to give away with ETF. A couple of these. All right, one more time. Look at the curve. The other thing I want to open is I want to bring an escape room franchise to Houston that doesn't have a presence in my area of Houston either. Another place to Houston. That's a little bit more expensive than the fitness thing. Escape rooms are a lot more expensive than I ever thought they would be. I thought they would be a little pricey, but when they told me the build out cost, it was twice as much as what I thought it would be. But not without reason. The cash flow backs it up. It's ROI. For the average escape room that this company has, the ROI is made within a year. Like the build out cost is offset in first year EBITDA. Most of them. You make all your money back in a year. $1 million plus revenue. Congratulations. It's about a mil half build out. But then I look at why. You've ever been to an escape room? It's like tons of like night vision cameras and like electrical like nightmare, I'm sure. Technology run systems. So it's gonna be very expensive to build. And you got the art, the set, all that stuff. My noise gate is still going on. Oh, wait, hold on. Thank you. Oops. What the heck is my noise gate being crazy again? I feel like every single time. I think it's this one. Hold on. I know what it is. Let me try this really quick. Noise gates. Yeah, it's so weird. Like my noise gate is not saving the settings. Here we go. That's better. Yeah, that's just weird. Let me save the settings again. Yeah, it never, like every time I reset my computer, it doesn't save my noise gate threshold on my first input for my mic. Yeah, it's on its mic, right? My bad. Don't we have a market died? Okay, we'll do another giveaway in a second. Let me hook you guys up some fun next accounts. Ooh, money. Let's go. Let's go. Let's go. It's only 5 contracts, so it's nothing big, but what am I trying to do? Oh yeah, we had a Market Please Die Today song. Yeah, remember that one? Hold on, Brad. Bro, Brad, I love it, man. That's hilarious. Look at this. Dude, I love it. That's hilarious. That's great, man. That's great, man. Well, I think the best performing asset of 2026 stocks. I think stocks and tech stocks are gonna be hot. I mean, I think stocks in general are gonna be hot for like. I think 2026 is the bottom of a huge like growth wave. Yeah, thanks for letting me know about the noise gate there. Hate all, dude, Brad, this song is great, dude. It's a Sir Darb song right here. You know, Sir Darb, those of you probably never figured it out, you spell Darb backwards, you end up with Brad. Are you not entertained? Like the Gladiator reference is fantastic. BCN, a bolsa. Where are we going here today? Yeah, and also the speed indicator is missing the more crucial component of it. It's just looking at the implied difference, the difference between implied and actual calculation. It's missing the futures arbitrage portion to begin with. So there's another line that's going to come out tomorrow that's going to be the one that's more useful. But I think the one's gonna be more useful is actually gonna filter in the futures price to it. This one doesn't filter in the futures price to it yet. It's just the difference in the index itself. So I'm having to like watch the futures price. So the idea was in the indicator itself, in the other one that he didn't make yet, which should be there tomorrow, is that when this goes up, the futures price will start to like be factored into it itself. Is that another RSI indicator? No, Leo, go to the beginning of the video where I describe how it works. What a great song. I want to hear that again. No, the RSI just looks for how much you surpass the range of the previous candle. It's just looking at price action. This is not looking at price action at all. I mean, it is. Let me start over. It's not looking at candle action at all. Bro, the song is great. And the picture is great because I don't know, you know, AI photos of yourself always come out looking weird. But like this turned out to look almost exactly kind of like me. It has my chiseled good figure too, you know, like my great certainly it captured my buffness and all of its beauty. Looks exactly like me, don't say otherwise. Okay, just in the face. Alright, congratulations, Vinesh. Got my pecs right, my biceps right. Fight with me on it. Pull out your piano. While they rage in comments, I just get paid. Dude, this is incredible. 9 nickels. Dude. My funded today, yeah, in 20 minutes. How many have I done so far? Okay, you two are the ETFs. We got 4. One more. 5 funded next today. How about that? But yeah, the escape room is like $1.5 million build out. I thought it was gonna be, you know, closer to like less than $1 million, but this one particular company is a high tech. Well, I was pricing it based on kind of like expectations from like traditional escape rooms. So this is a high tech escape room. So the technology makes the price go like way the fuck up. Say my name. When does the month end? Tomorrow. Tomorrow's Giveaway Bonanza, baby. God, I wanted to smash this with like 20 fucking contracts, I swear. David Foster, 5448, type something in chat, bud. All right, man. The 5 of y'all, congratulations. Y'all are winners of Funded Next 25K Rapid accounts. I think Lex is already in there grabbing that. All right, so we all need to do, go to the Discord. Giveaway is over, my friends. Great job, great job. Giveaway is over. Winners, go to the Discord. Links in the description below. Go to the contest channel. Yell the admin name Slacks. Tell me when the giveaway. Send a screenshot of your YouTube ID so we can match it up. Have an account already with Futures Desk, ETF, Funded Next, the ones we work with. Make sure you keep using the Rocksuiter code with all your prop firms. When you do, they give us more accounts to give away. Like the more you use our code, like we return that love back to y'all. Slack should get you your account within a day. Make sure you also let them know that your ID for those, your actual login ID for each of those prop firms as well, the email you signed up with. That way we can tell the prop firm to assign it to you.
The sky is heavy.
Congrats, congrats, congrats. Tomorrow is Giveaway Bonanza, guys. Tomorrow we're giving away every last account that we have sitting here. So tomorrow's Giveaway Bonanza, we've got, like, I'm just gonna estimate like 15 Funded Next accounts. Like, I'm gonna give away Apex giveaway today as well, so don't go anywhere. I'm gonna do Apex in about 15 minutes, guys. So don't go anywhere. I've got maybe 10, 15 Apex accounts left to give. Like 15 Funded Next, 7 or 8 Futures Desk probably. I'm just quickly counting. I gave away all my funded futures, so I'm out of those. But I was asking for more. We got some Take Profits still ready to go. We've got 5 Tradeify straight to fund is given away tomorrow. Don't miss out tomorrow. And about 10 more ETF accounts. All tomorrow. Thank you for lovely giveaways. So appreciate you guys being here. Whoa. Another 15K day today, which is good. I get my ass handed to me in early December. It feels finally good to be like aligned with the market again. trim down to my original position. Runner of 1.
Every storm starts quiet, then takes its flight.
Just playing the range. I think it's gonna go lower. Actually, let me just take the profit. I think it's gonna go lower, but I'm okay with that. I'll close everything out here as well. Dude, this song is fucking great too. Oh my god. How much is that today? It's a smaller day compared to like what I've played yesterday and also what I lost in December. I'm down about 150k in December, something like that. Screenshot this on Twitter. But man, the market was just out of sync with reality, you know, for the longest time. I'm trading small today. Mm, 11, 14, 14, about 15k. Yesterday was almost 50, which is good. Also, remember, we can't forget I had a day where I was down like 70k. So, they're kind of working back up to neutral there. There was like a 6, 7 days. Three trades back to back in one day lost. 20k plus a pop. Oh, swinging big too on that one. Or big relative to the account. Let's see, 47, 42, that's what, 9, 10, about 11, 14, So tomorrow's gonna have the actual. This is just the raw discrepancy in the actual. Let me double check something real quick. Something really quick here. Let me make sure you know. Fact that it. Hold on 1 second. I just closed arbitrarily at half gap again because resilience is greater than 0. That's why I closed out my my trade there. Yeah, I think it's still fall lower, but I just don't really have any. I'm just playing it small. 15k. I'm okay with that. Oops. Well, I gotta make a note for development just to double check something in the math here. Okay. I did the math right. Hold on. If that is right. All right, sorry, I was giving a note to my dev team just to double check, just to make sure that. So I haven't seen the indicator go negative, which could be just a condition of the 2 days, which is possible. But even with resilience being negative a little bit, yeah, I was kind of hoping to see that respond with a negative approach. So it could be that one part of the formula is still maybe the sign is flipped and it's not counting the negative stuff. All right. I still think we're going lower from here, by the way. All right. Friends, it's been a good day. More of a sort of good, because this is kind of what I envisioned the day would be like. I still think we crawl lower and find lower lows, but we don't close lower lows. We have a wick at the bottom too. Probably my next move would be to long off a hedge pressure. If we make it that low, I'm gonna hit that hedge pressure long pretty freaking hard, and then like if it dives from here another 30-50 points, I still hold on to it. I've been training it back to the middle all day long, you know, essentially getting back to this area. We don't have any strong pivots here. We've got this possible dive on that. Then hold on to it. Arena, what's up? They're a totally new firm and want people to give them money. And then wait, what? Trading tenacity. Oh, competition with too good to be true rules. Waiting for a set amount of funds to come in first before they start it. So they're a prop firm. All right, well, yeah, that's, think about it like this, right? You want to start a casino, but you want to make sure people don't get paid out for the first month, right? You're trying to build a cash buffer to absorb. That's a smart thing, but also hints that they might not have a capital. Kickstarter prop. I find, look, at this day and age, I'll be honest with you, I find any prop that doesn't emerge on the scene and give me a phone call within a month of their existence to be a little questionable to begin with, because every prop firm that starts calls me up and it's like, hey, we'd love for you to be an affiliate. Blah, blah, blah. Why? Because they're marketing correctly, right? So, and they usually say, here's some money to mention our brand. And usually I say yes or no. And usually I say no, right? Because I have 6 partners. The reason I'm bringing this up to you is because a lot of firms don't have money when they get started. That's why I'm saying it's fishy. Whoever clips this and posts it online, this is the reason I'm saying it. I'm taking it out of context. You know, fucking weirdos out there. The context is, if you're not paying for marketing, you ain't got money to pay your traders. That's the context. It makes a lot of sense. Any prop firm that emerged on the scene is not. When I talk, I've been texting some of my friends and I've asked them earlier if they heard of them. They were like, I hear about it, but they haven't reached out to me either. I'm like, have you heard of these guys? Are they calling you? No, they haven't called me. It's what a lot of people are saying. So a lot of the, again, be wary of a firm that doesn't have proof they got funds to spend. So that's the point I was bringing that up. A healthy company is going to have, you know, a healthy amount of money to make an offer to your larger influential folks in the industry to just represent the brand. And if they're endorsing like streamers and stuff, then they probably got the money to pay out your payouts. They usually just appear and do some kind of gimmicky marketing. Just be wary. Not saying anything bad about it. They could completely just have trillions of dollars. They just want a couple more billion, whatever. Just remember that rule of thumb has served fairly well in this industry. A lot of the failure firms were firms that reached out and were like, hey, we'd love to get you on as an affiliate. And I'm like, well, you know, that's not how we operate. In general, you know, this is kind of what we do. We're different. We're not like just an affiliate with a million codes. A lot of them are like, oh yeah, we don't do influencer marketing. We just do standard affiliate. And I usually say and like in my head, I'm usually like, this firm probably won't last. And then they don't. Usually they don't. And so because it's so easy to start a prop firm, you don't need much. You don't need money. You just need a funding source. You don't even actually these days, you don't even need the funding source. And actually these days, you don't even need to have a connection with a broker. The rules have gotten so lax. You can just start a prop firm with the website and approval from Tradevate. That easy. Which is crazy. Any of you guys can go start a prop firm tomorrow. You just got to figure out a way to raise capital to make sure that you have influx faster than your initial outflux. If that first trader makes $1 million payout from you and you don't have the money to pay out because you haven't sold enough evals, and you're screwed. So that's kind of the thing with prop. It's so easy to start a prop firm these days. No, maybe they don't want affiliates. Well, yeah, either case, any kind of, even if it's not affiliates, we don't really do affiliate marketing that much. I mean, you very rarely see me on my Twitter, check out the sale, here's my code, use my code. Maybe once every 2 or 3 days, I might make a post about a prop firm. Some people, it's like 10 posts a day, right? So in general, usually they'll introduce themselves and say, hey, we'd love for you to share our prop firm to your community. Here's like some giveaway accounts. That's usually what they'll say, even new ones. And even without like an affiliate code or relationship, they usually want to like enter the space and then have people talk about them. Like I say, the ones that never reach out are always the ones that fail. That's what I'm telling you the correlation. Every time there's a hurricane in the summer in Houston that touches the land, It doesn't just fizzle out in the ocean. Every hurricane in Houston that touches shore, 100% of the time it will snow in December, and it does it so infrequently you can remember the times it snows. It's always a hurricane year. We snowed last year, we had Hurricane Beryl. It's the pattern of that. Every firm that didn't look like it wanted to spend money or interact with influential folks or donate something to the streams or whatever are always the ones that you don't hear about and always the ones that eventually don't make it. And usually it's because they didn't have money to pay out. That's a trend like the hurricane thing. Thoughts on Take Profit? Take Profit's really good. That's like everyone's favorite firm here. It bounces between first and third used code all the time. How much capital need to start a prop minimum? I don't know if it's even required anymore to have capital, but the Tradebate application doesn't ask you to prove that you have capital. It's become that easy to open a firm. So it's pretty easy. You just need a funding source, like a proof that you can fund, and you have to share your business model with them and all the stuff, your pricing, and then they have to approve you. And they just don't approve any joker that shows up and says I want a prop firm, but they approve a lot of jokers. But jokers also come with, like, you know, a proposed prop model and stuff, and they apply for it. What's up, Tyler? Best system in the world. Bro, we're gonna hang out in Florida when we come. Does this analysis of hurricanes use MHP break? I wish it did. Yeah, so my mom and we're all sitting at dinner over the weekend, and they were like, or lunch. We were talking about the hurricane because talking about my garden got ruined, and she was like, "I wonder if it's getting cold. Don't forget to wrap your plants." She's like, "I don't know if it's gonna snow this year," and I was like, "It's not gonna snow this year." That's what I told my mom. No snow this year. Like, well, how do you know that? I was like, well, there's no hurricane. That's the trend. It's the whole El Nino thing. Get the low pressure system pushing all that warm, moist air this way. And then when the winter time comes around, then the cold air pushes back like a spring. You get all the cold air coming back. All El Nino stuff. I'm not a meteorologist, but magic could tell you magic. Funding ticks. You got into funding ticks because of PW. Now he's quiet with it. Oh. It happens with some firms, dude. It's not his fault, you know. We're just people that, like I said, we're just people that a prop firm comes up to and goes, hey, here's some money, talk about us. You know, and we take the risk in our shoes to say, yes, we'll take the money. No, we won't take the money. A lot of us, you know, have different ways. I don't know his method, what he does. I do my due diligence for any firm that I work with that hires me to do marketing for them. I always try to do my due diligence the best I can, but you can't predict everything. Clearly, they're not like, here's a look into the company books you can investigate yourself. You know, you don't get that transparency, so the prop firms can easily bamboozle one of us too. You know, paint the picture of legitimacy and then have ulterior motives they don't disclose with us. I mean, we're just hired hands, right? So we can't do, you know, it's impossible to do 100% full due diligence on a firm. Red Candle, it's about going to Florida, dude. We're going to hang out. Me, you, and Tyler are going to hang out, bro. And we're going to go to the casinos. We're going to go gamble. We're going to get drunked up. I got to go in a little bit to my funded TV, by the way. So, you know, like I said, don't blame people like Pat or me or anybody if the firm falls apart. We don't have the ability to see that as it's happening. So either A, nobody markets anything, or B, occasionally you're going to get caught up with the bad seed that you would have no idea knowing what a bad seed is, right? They don't sit down and say, hey, by the way, you know, we can market with you. And you're like, yeah, show me your books. Let me see your risk model. Let me see. They don't do that. They don't show us this stuff. So we kind of got to like do our due diligence with like surface level information. It kind of sucks. But hopefully Matt's prop scoring website will let you plug in the parameters and tell you if a firm's parameters are too good to be true, which is risky for them, or absolute dog shit, which means it's healthy for them. Remember, a firm with dog shit rules is usually pretty healthy. The shittier the rules, the less money they're going to pay out, right? So the cool part about that scale is if a firm ever is going to work with me, I'd plug it into my system. The score will come out as a 4 out of 10. I'll be like, how much you going to pay me? Your rules are dog shit. Therefore, you're not going to go bankrupt. The rules come out as a 10 out of 10. I'm going to be like, that's too good to be true. Are you sure you can pay out these traders? No DLL, no consistency, no profit target, infinite contracts, $10 account, 3-day payout. Came out as a 10 out of 10 on the scoring system. Well, those rules are too good to be true. I don't know, man. I don't know if this sounds a little fishy. The prop firm comes in 7 out of 10, average scores, run of the mill, decent setup. Yeah, okay. They're probably not going to go bankrupt at this. Website releases end of January. 110% split. Yeah, if a firm comes to me and they're like, I'd like to work with you, and it's like a 10 out of 10, I might ask for a little bit more information. I don't know, man. 1 day to pay out 90% off account. 110% profit split. You pay me more than what I make. Oh boy. 110% split fucks the equation up, and the score is 11 out of 10. It's even breaking the scale of 10. According to my rules, Top Step is the best. They have the best platform. No one can trade. So therefore, there's no bad data points. So therefore, the score defaults to 100 out of 100, apparently. That's hilarious. All right, I got to go to My Funded TV, my friends. Y'all know the drill. Everybody head over there. Give some love to Methodical and Barbie. And I'll be back in the afternoon to close out the day with you guys. And boot camp today. Thank you for Rena and Slacks for posting the link there. Tyler, are you been trading, bro? Like, we're gonna drink 4 bottles of Pinot Grigio and have 25 cigarettes? Bro, what are we, like 2 divorcees sitting there? Like, are we gonna have what are we smoking? Like Virginia Slims here? They're bottles of Pinot? Hey, you sugar. I'm sitting on mama's lap. That's a party if there ever was one. That's hilarious. You're smoking American spirits. Go slim or go home, man. This shitty bottle. Barefoot Pinot Grigio. Like $7 Pinot Grigio. Hilarious. All right. That's Degen City, baby. All right. We'll see y'all later, guys. Oh, I just got word from my developer that he did get the sign backwards. Ah, my suspicion was right. So the sign on the negative case was backwards, so the indicator, unfortunately, was always positive. So that suspicion I had was correct. He just wrote me back and said he's changing it now. Should update pretty soon. I'll give you guys the word on that. But you'll refresh your platform when I give you the word, okay? We'll see y'all later. What's up, guys? We're back. I'm eating my breakfast, so. Okay. So, hey, somebody give me the saga of funding ticks. I never worked with them. I never even looked at their page. I don't know anything about. I all this drama going on with that firm. What happened? Can somebody give me the Cliff Notes summary of that? We're still in the process of like adding all the firms to the website. So you're actually one of the ones I've never looked at. Retroactive rule change? How bad was it? Tell me what they changed. If you give me like a stronger summary. How bad was the rule change? People are acting like it was a huge deal. Marina said, we're actually enforcing new rules, took away profits from weeks before. It had to be longer than a minute. So, if your trades weren't so they retroactively made a rule that says your trades had to be longer than a minute. If your trades weren't, they took the profit from you. That's pretty bad. You know, at least when Funded Next did the retroactive rule changes, they undid the retroactive part when we told them that you can't do that. So hopefully people scream at Funding Ticks enough that they listen and don't do that. They honor it. The one thing is that a firm has to make a drastic move to save its ass. I get it. You know, that protects the greater good of the firm and everyone else. I get it. But it sucks. I don't side with the firm when they do that. They got too greedy and then they didn't plan ahead, and now they got to punish some people to save everyone else. That's really what happens, right? Think about it like this. When a firm makes that change because they're running out of money, they can't have everybody fail. They make the risk decision of, well, we got to think of it like this. This is any risk assessor will tell you kind of the same sort of math. Don't none of y'all quote me and say, oh, Matt's supporting this. I'm not supporting it at all. The idea is like, imagine that you're on a plane and a plane is full of explosives. And, you know, there's a nuclear bomb. There's 75% chance when you land, it blows up the entire city. And there's 50 people on the plane. So the risk assessor would say, crash the plane in the ocean. You have to kill the people here to save everyone else, sort of feeling, right? So the risk management teams and firms do the same stuff. Like, God, nobody ever wants to deny payouts to anybody, but if they do, it's an immediate backlash in the community. Question is, how bad is the backlash versus, you know, like saving everyone else? And they do this kind of, any like company has a car, the seatbelts fail 1 out of 1 million times. So they just are like, fuck it, we'll just settle the lawsuit the 1 out of 1 million times we get sued. Why issue a recall? Cost of recall is more than the cost of just settling with the families of people that get killed. This is a dirty world we live in when people do this shit. So in reality, the firm makes choices, I see, to save everyone else, to screw over a few, which is wrong. I think it's absolutely wrong. Horrible. So they can't make those kind of drastic decisions to save their ass. They should do something different. I never side with the firms when they do that. I say you should always honor what's written in writing, because legally in court of law, that's what will happen. If any of these, you know, traders had the ability to sue, they could win. They just don't have the money to sue. Like, really sucks when they do that, because they're saying, what are people going to do about it? This is kind of the mentality. The firm will go, what are people going to do about it? Who cares? Talk shit on social media. We'll still survive. Blah, blah, blah. Everyone else will be fine. Let's just screw over the few people and then be done with it. That's kind of what they probably do. I'm not saying they do that. I'm just saying this is they as a generic they. So Prop firms have very sophisticated risk assessment teams whose whole job is to, you guys know what I'm talking about, like the recall situation. Y'all understand that, right? Their whole job is to be the evil people in the room that say, kill 1 out of 1 million people, pay $1 million. Okay, we'll just settle with those folks and recall, it'll cost us $100 million. No. So they, like, it's like that sort of risk assessment. There's like teams of people, that's their job to do this kind of stuff, right? Nobody wants to say, let's do retroactive rule changes. So it's a really big hit on your PR, and that really sucks. The people that weren't affected don't even care. They're like, well, it didn't affect me, it's fine. And then they make that decision. I hate when these firms do that. I really do. It's like corporate America, kind of like our government. I mean, yeah, it's like the whole same thing. Yep. So anyways. The bet that they make is that you guys can't do anything about it. You know what you can do? If they deny your payouts, you can sue them and you can win. They denied me my $22,000 that's owed to me. Great, go retain a lawyer. It can cost you 10 grand just to retain the lawyer. And 50 grand in legal fees to win your $20,000 back. They understand that the risk is very low to them as a company. That's why, if you guys understand, remember, we look at the high IQ thoughts here. This is the reason that they do this. They can get away with it. You can absolutely sue them and win. Class action lawsuit would be the way to go. People got retroactively denied. You got enough people to pull together your resources to hire a lawyer. The overall judgment could be millions of dollars and worth your time. But individual folks are just going to go cry on social media. And therefore, they're going to just say, well, fuck you guys. We don't care. And that's kind of the approach that a lot of them take. There's nothing that's ever done about it. But in legality, they're absolutely breaking the rules. They're contractually obliged to honor what's on their website in writing. And if they deviate from that, you easily can win that lawsuit. Well, the problem is it's expensive up front. Yeah, and also if they're not in the United States, you're gonna have a hard time enforcing a lawsuit. Certain countries will just take the papers you serve them and wipe their ass with it and throw it away. Yeah. Your buddy sued City of Houston and won because they made him look like a bad bus driver. Oh, are you serious? Oh, that's awesome, dude. Well, the problem is, Shmei, is that it's not that the rules weren't followed, it's that they changed the rules and then they applied it to people who purchased the account under pre-existing conditions. So if you buy something contractually, like if somebody tells you something, and like you study like your tort law, right? You got like contractual obligation. If you make a contract with somebody and they breach the contract, it's technically fraud. So you can win a civil case on the basis of fraud if the contract doesn't explicitly state that they can change the contract retroactively at any time, if they don't have the legalities in place and all that stuff. So there's always a defense to that. Retroactive change is a big no-no, but a lot of the firms also put in their bylaws or their terms and conditions is we can change our rules at any time. And then you're kind of like, well, you're in that legal area that you probably can't win if you tried. It kind of sucks, right? And the problem is from us as customers, there's nothing we can do about it. Terms and conditions were like, by the way, we can change our rules at any time. And the minute we do, they apply universally to everybody. Then you can't go back and sue them for it. Like if you had an app on the iPhone that you bought the iPhone to use and then they decommissioned the app, you can't just go sue them to get your money back on an iPhone because they probably have in the terms and conditions, you know, some preventative measure to that. So the problem is customers were kind of stuck with sitting on our hands. So you always have to basically assume that, well, the risk is there for that happening. So how do you, let me ask you guys as a pop quiz. How do you, as an intelligent individual, mitigate that risk? If you know you have no recourse, if that was to happen to you, how do you mitigate that risk? What would you do as a risk assessor yourself in the situation that a firm can probably just outright screw you over tomorrow? What would you do to protect yourself? Let's say somebody said gun, LOL. Multiple prop firms, as Goober said, LOL. Yeah, you guys are so smart, you figured it out. You hedge your bets that the likelihood of that is very low, and therefore the probability when you say the likelihood of something happening is low and it happening again is low, when you do and, something is this and this, so get screwed over once and screwed over again, you multiply the probabilities together. If it's a 1 out of 20 chance that a firm will fuck you over, then the probability that 2 firms will fuck you over is 1 out of 400, right? So, know how that works? This and that, those 2 firms. Probability is really low when it's or you add them together. When it's those 2 that you're trading, if there's 20 firms to choose from, and the firm A and B that you chose each had a probability of fucking you over, then it's a 1 out of 400 chance that you chose the 2 that fucked people over. So diversifying is the way that you counter that. Spread your risk out. See, again, that's why you guys hang out here, because y'all are smart people. Trade 5 firms. And your odds that one of them screw you over will be offset by the 4 that didn't, and therefore you're going to win in the end. Be smart. Spread the risk out. Yeah. Use the top. If you want to use one risky firm that's new, that just entered the scene, you better hedge it by using 3 other firms that are not. You get what I'm saying, right? You guys are so, that's why I love the Roxy stream. I think the smartest people that watch trading always ends up here. It's like you guys all get it. I don't even have to say anything. You guys understand. You're not gonna be able to do anything but mitigate your risk by using multiple firms. So that's really the way to do it. Yes, when they screw you over, complain on social media, you're not gonna get your money back. But what happens is if they screwed me over, I would say, man, that fucking sucks. But hey, at least I still got these other things going, right? So plenty of firms out there, no biggie, just move on, yeah. But don't go all in on the one cheapest firm with the best rules, too good to be true rules, and make that the only place you are. When that retroactive change hits, you might lose all your progress, right? So play the game in multiple places. Don't spend, if you're gonna spend $1,000 a month, don't spend it all at one place. Spend it in 2 or 3 different places. Like, divide it up a little bit, yeah. Spread them, baby. Farina said, spread them. Like a cop. Whew. How's Apex worth a shot, RBS? Apex has been, okay, let me start over. Apex has been good to me. Now, this is before I was massively huge on YouTube. I never had a problem with Apex, so you can't say like I got favoritism or whatever. I've never personally had a problem with Apex. Other people, for the most part, haven't either. Some people have. Some people have had some of their payouts denied. Others have had to provide videos. And to me, in my experience with the amount of people I deal with, is normal with all firms. Apex is a little more restrictive, but not by much. A lot of firms out there do the same exact thing. So what I say, Apex is definitely worth a shot. I've changed my opinion as I've gotten to read more about what Apex's rules are and study the cases of people that said they got, you know, denials or whatever. For the most part, the firm is, in my opinion, is not in the wrong most of these cases. So, I've never had a payout denial or anything from Apex. Some people have. So the people that have obviously don't like it, but then there's always somebody that's had a problem with some firm, you know. So your style of trading might have triggered some rule with some firm, and then trade it in a firm will work. These are they're all slightly different, right? So everyone just choose Apex. Somebody says it's good if you follow the rules, expect to follow them to a T. Don't give them a chance to deny you and you're good. Yeah, Apex is like known for you got to go the extra mile to really study the rules and follow them to a T. They've got all these like little rules you got to account for that you can't like not pay attention to. Keep the same contract size and profit target every day. Right, yeah, like, and again, like most of the people that are getting denied are people that are like being inconsistent with their trading. And like, well, I never went inconsistent. I'm making and losing the same amount every day, same contract sizes. I'm never YOLOing and full porting or martingaling the account. I'm just like trading same amount every day, up a couple thousand, down a couple thousand, up a couple thousand. And that consistency never had a problem with me. Like I never got flagged. I never had to submit interview. I never had to do anything. That's before they knew who I was. I didn't have an affiliate code the time I was trading with Apex. I didn't even get affiliate codes until like May of this year. That's the crazy part too. People associate with me being some prop salesman. I've been in the prop industry for 7 months since May. Literally, like May was when I was like, hey, Matt, you should get a code. I was like, oh, okay. I think I made the post about, hey guys, I'm gonna get some codes for props. I've just started doing that. So I'm new to that game. Am I right? It was about May. I would say when I started really pushing, I had some codes. I think I had a code for ETF as early as maybe January. That was it. And I never really promoted it or used it. Let me double check it was May. Yeah. But this year, yeah, this year. But remember, ask. The idea is not to just say, is a firm good or bad? You really have to ask people that don't like something. Ask them like what they did, right? What was the reason you got denied or whatever? And they might tell you something. You might, and then your job is to go, oh, that's the way I trade too. Oh, that's not that good. Actually, I would say May is not right. February is about when I started going heavy with props. I thought, why did I think it was May? Well, that's because May is when I got heavy with all of them. February, as early as February. So I had a code with ETF and Apex like February-ish. January was just ETF. Tradeify I added in March. No, I'm sorry. February. I added Tradeify in February. That's it. And then the following months, I started adding more. May was Take Profit, Funded Next, Futures Desk, My Funded Futures. All came in May because that's when I started working for My Funded Futures. So that's when I piled on all the rest of the codes that I have. So yeah. Somebody said, consistency seems to be what they get people on. Yeah, somebody said, not be dumb to make your max revenue streams. You're already using props and streaming daily. I mean, I could go out and get 40 affiliate codes too and add a couple $100,000 extra a month, I guess. Just some things are not, I think, worth it for a brand. I think that you create a stronger, like less chaos. If I had like 50 codes on this stream, the focus, now the new website will have a code for every firm. We have to be fair to everybody. But the idea is on the stream, my promotion, me talking and whatever. I feel like keeping it tight with just the majors is the best way to go, because it would be really bad for business if every funding ticks in the world was under my umbrella and it's just like, don't trust what Matt says, because every other firm he talks about just ends up dying. I'm very scared to get on board with a new firm because I don't want to be in the fallout if shit goes sour with these guys. FOMC minutes, baby, coming out pretty soon. Yes, sirs. How are we gonna flip the coin? All right, you guys, should I flip a coin or what? How should we do this? You will start to see now that the indicator is correctly, correctly calculating. You're gonna see portions of it around 0, similar to what resilience is doing. You see how it's moving kind of similar? Not exactly the same, but similar, right? Like this is a hump and this doesn't. Around the 0 point is where the sensitivity is gonna get really big. So we'll see how this works. Full prolonging. Yeah. Like, I feel like if I go out there and I just would like to promote every firm, there would be a lot of fallout from that. But I just be smart with you guys and tell you, always hedge your bets by playing different places, play different casinos. One of them screws you over, the other ones didn't in that week, and you have to assume that's just part of the game, is that occasionally 1 out of 20 or 30 of these are going to change the rules on you. And what do you do about it, right? What can I can't do anything about it. I don't make the rules. I don't know the rules. They don't give me a heads up. They screw me over too. And then we're kind of stuck in that boat. So I had to tell you guys straight up, before you buy anything, the smarter thing to do is to diversify between a couple firms, trade only the bigs. When the rules are too good to be true, milk it and try to be the first one to get the payout, and then know that the time on that's limited. Four minutes till meeting minutes, you guys. That first candle coming out. What do y'all think? Green, red. Up to the top. You dare me? You dare me to make a play? Ooh, the new can I make a play off the new indicator? Let's just short one. Let's just do the whole, let's just do this, right? Let's play with one contract, because if we burp, you know, one contract in the daily range, barely nothing. If I go up 60, 80 points and go down 60, 80 points, we're talking barely $1,000. 25% loss in the gains they made, not a big deal. Short that one, because I think even tonight, even if it burps up to the levels I wanted to see, I'm still going to build for downward for tomorrow. 820 today on NASDAQ. I can go up 100 points. That might be a $1,600 loss on one. Oh, dude, I'll pile into a short here. Oh my God. So here's the trick. -1. If it dumps, I made something. If it pops, I pile in, trade it back to middle, make a fortune either way. All right, green either way, baby. The only way I'm gonna lose is it goes to here, just stays here and does nothing. 820, that's it. That's the level. See, risk management for the win. All right, let's go here and check this out. The minutes are gonna, like, again, the Fed was a little wishy-washy this time around. The minutes might be a little bit more revealing than we anticipate. I don't think it's gonna crash out, but it's like, you know, this low support here, right? If we break 840 and keep going, well, then I'm gonna be very confused tomorrow. Like, you know, this area and this area preserves, you know, that support becomes resistance. I get it. If we're up here, this is tomorrow or today at least. Like, I'm still bent on the fact that we're gonna probably close in the same fashion of being like red, 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 small reds. What is this song? Oh, dude, this is music I wrote with AI. It's just AI lo-fi hip-hop beats. It's nice, right? Let me give you the... Hey, share the playlist. Hey, you guys want the playlist? Hold on, let's see if I can find it. I think it's public. Here you go. Here, check this out. I honestly, you can copy the prompts that I made and just like write a ton of music on your own off of the same prompts. It actually was really cool. I wrote like hundreds of songs. You know, Suno writes like 2 at a time. You give it a prompt and then just keep the ones that you like, throw away the ones. I bought a huge license so I can write like, how many I have so many credits. I have 2,500 credits. So I can write, I don't know how many credits per song, but I can write a lot of songs. So I've been using it a lot. Although for the stream music, I haven't been doing too much with the stream music. The elevator slappage, yeah. At first, it's crazy. Like right now, I end up I find myself humming the music all the time. You know, like whenever I'm walking around, bum 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 bum, and I'm like, I get that stuck in my head. And it's crazy when you write the AI prompt, you don't realize that that music is going to become part of your lifestyle. And it's now I always hear it in my head. No, it's just the minutes of the meeting, and it might be revealing off of something we didn't already know, but probably not. I thought it was going to be a little more chaotic, but I don't think it's going to reveal too much. Let's go to Financial Juice and read. Some of the notes from it. So this is mostly hinting that we're not going to get a rate cut anytime soon. Most participants judge further rate cuts would likely be appropriate if inflation decline over the time as expected. So it's like this kind of rules out January, February rate cuts, right? Let's go to the CME Fed Watch. Let's see if that has any effect on the Fed Fund Futures 30-day Fed Fund Futures price. Yeah, it's like extremely low probability. I didn't read what it was before, but we have no, almost no bets on a January rate cut, which is what we all expected from the minutes. Yeah. You wake up with this market, don't die today. Oh, we got tons of good music. I want to hear some of these other songs. Dude, that one song was so good. Hold on. Brad made one was like really good. Hold on. I got Tequila Brain song. All right, now the indicator's been fixed, by the way. It was missing a negative sign on the negative portion of it. Wow, 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 wow. I'll play with 2 then. If it skyrockets to 69.70, I'm fucked. I'll break even for the day. I get 80 points, I'll be down. If I lose 80 points, I'll still be up 800 bucks for the day. 80 points to be right at 25. I'm not gonna hold for 80 points though. There's only just one negative on NASDAQ and S&P. I'm gonna hit it short with 2 of my Planet X accounts as well. Just 2 though. 5 contracts in one, 2 contracts in another, 2 contracts in the big account here. Just scalping small today. Did I make 46 on my live account? Yeah, I did. Remember, I padded it that one day to like roughly like 100 and something. 100 and some change, and then I also lost another day after that, and then I didn't stream 2 days last week. Christmas Eve, I don't think I streamed. Christmas morning, I didn't stream. But I made a trade was it Christmas Eve? The day where the market was like flat, the half day. There was a long trade I made, if I remember correctly. Don't quote me on that though. And then I made 28,000 yesterday, and then made some today as well, 5,000. Yeah, this day. So I was trading pretty much all of these days, except for Friday I wasn't trading. So Friday, on stream, I didn't even load up the account. I only opened my Fund Next account. I was like, I'm not trading today. So I made a trade on this day, and I didn't trade here. So I won, and won. So I'm back up to like 150, yeah. Yeah. Doc and I went to brunch, and I had a trade that morning. We went to like Santa Claus themed brunch at the Post Oak Hotel. Got a picture with Santa. So in the last week, I've made 50K. Because I was about 95K before Wednesday. I think that's where I was on Wednesday, like 95. So yeah, so 50K since then. This song's really good, dude. Volk's part, damn, bro. It's a good song. They use Suno usually to make these songs. S-U-N-O, yeah. How much did I make per day on each of the 100K Fund Next account? You just passed 3 of them today. For the 100Ks, a good rule of thumb, because I think the drawdown on the 100K is only 3,000, right? So the trick is to build a buffer really quick. You can do one of 2 ways. Either A, you can pass 50 of those things, and then just as the market falls, you just martingale a buffer into 3 of them. Remember, after January 1st, you can have up to 5 of those accounts. So I didn't do the martingale trick. I just traded them small. The martingale trick is pretty simple. You have 20 accounts in reserve. You pay all this money to make them. And then market falls to there, you're long with 5. Market falls there, long with 5, long with 5, long with 5. And then one of them gives you a 10K buffer. Perfect. Blow those up. Now you got 10K. Now trade that 10K small. 1 to 2K a day, 1 to 2K a day. 3K buffer is too tight to scale. Or the other way, which is the way I did it, is instead of having I still have all my accounts in reserve. The way that I did it was trading it small. So 2 contracts, period, max for NASDAQ. Try to get 1 or 2K buffer in the account 2 or 3 days in a row, and then slowly build your buffer that way. Sorry about that. Yeah, that was a good song. Both of those ways are feasible. If you don't have a lot of accounts in reserve, then your goal is to trade it small, right? The new payout cap. So you get up to 100K payout. So a combination of payout plus reserves is 100K. So anytime you get close, okay, anytime between 0 and 100K, they can move you to live. They don't normally do that. So once you start taking payouts close to 100K, and then you have a balance that then that plus your payout is in excess of 100K, they may move you to live, and the remainder of that gets put into a reserve that funds your live account. So they don't lose, you don't lose your profit. They put in a reserve, and then they buffer your live account once you blow it up. Example, you have taken 50K in payouts. Now you have a 70K balance, ready to take your next payout. They give you an email that says, congratulations, you're going to live. I forgot how much they give you. I think it's half. They give you half and put the rest in the buffer. So the example is they give you 35K of the 70, add to the 50 you already made. You took 85 net, and you got 35K contributed to your live. They give you a live account and put the rest in the buffer, something like that. It's 100, it's per all 5 accounts combined is the last information I got from them. It's not per account, yeah. I love this song, dude. Get these like emails, they're so funny. It says, Mr. Cowart, you have been selected to see if you'll be approved for a credit card offer with 100% certainty. Like, if you, okay, let's start over. You'll be selected if, this is just a generic email. Let me read this again. Let me read this to you guys. I get just random spam email. You've been selected to see if you can be approved for 100% certainty for a new credit card with whatever bank this is. 60% of the time, it works every time. I love the way this marketing works. If it's an if, that's not 100% of the time. I don't get it. That like logic, like divided by 0, they're like my, yeah, like brain is hurting now. Yeah. Kevin, whenever the indicator, like I'll bring it up again and more into the stream, like into the morning and stuff. So currently right now, new indicator on NASDAQ, nosediving below 0, by the way. It means at the half gap, some of the stock, it's basically, Kevin, we took the sensitivity of the stocks near the half gap and turned it's a portion of the resilience code that we brought into it as its own indicator to make really, really, really solid decisions of the market overshooting, undershooting, whatever. Just to see if it does something, yeah. You've been selected to see if you can win a prize every time. So there's still a chance that you don't get it because it's if, not congratulations, you've got this. It's like you've been selected to see if you are approved 100% of the time. Okay. All right. Roger that. Some of the times it works every time. You won the chance. Yeah, well, you won the chance to apply for the card. Congratulations. I'm not a credit card person. A lot of people are like, let me get credit cards so I can use points. But then you pay for like the fees. Unless you do a lot of spending on the card, you don't really get your points worth. But if you do, you get the points worth. IDOC's the credit card person in the family. She loves it. I don't. I don't do the whole points thing. It works. Slipshot. It works 100% of the time that it works. But the times it doesn't work, well, it doesn't work, right? You get approved 100% of the times we approve you. You get approved every time when we choose to approve you. Very cool. What happens when you choose to approve people? Oh, there's a variable there. Yeah, the way that we do our spending here is we put it on iDoc's credit card and she uses the points to travel with and spends them on stuff there. Like the big stuff. She has like a mass amount of points. We buy all kind of stuff on points for that. I don't mess with it. I have a credit card. I use it, for business stuff and whatever, but I'm not a big like I have cash buy everything. When you pay your bills with your Chase card. Yeah, that's the one I have, the Sapphire. It's a pretty good card. I actually only got it so I can get to the airport lounges. But then now everybody gets in there, so it's like I'm in place now. There'll still be an open Christian, because even though stocks are going to be trading 24, they already do trade 20 hours. Hold on. 19 stocks already trade what, 19 hours a day already, right? How many hours it trades from market open 9:30 until 4, then they close and then reopen at 8, so 4 hours. They trade 20 hours a day already for the most part. You're not gonna notice much of a difference. 20. Video opens at 8. I've been watching that lately. Yeah, it's like, well, it's not all stocks, but like most stocks do. Yeah, pre-market, they trade around the clock almost already. But the opening and closing dynamic is not going to change, because the opening and closing has everything to do with like the firms, right? Even though stocks are trading 24 hours, humans aren't working 24 hours. People still come into work at 8 o'clock in the morning and do their shit in batches like that revolve around human office hours. So you're still going to see MOC, MOO and stuff. Here's NVIDIA. NVIDIA pre-market opens, this is 19 o'clock Central, so that's 7 my time until 3 my time. So it takes a 4-hour break. Actually, not a 4-hour break. No, I'm sorry, not a 4-hour, because it trades post-market too. I'm stupid. No, it actually trades 23 hours a day. Oh yeah, I forgot about post-market. I'm an idiot. Don't listen to my math. Hold on. Stock, do they ever pause? Again, I haven't traded stock. I thought they took a break, but maybe they don't. Hold on. No, stocks don't. They trade all around. They already trade around the clock, at least electronically. Yeah, I thought there was a pause. Well, don't listen to me, because there's not a pause. Hold on. I don't stare at this enough. No, it doesn't look like it. Yeah, there's. Where is the pause? When is the pause? When is the post market? Yeah, there is always a pause, right? Let me go into. Right, because every night at 8, there's always like a surge of volume in stocks. So there's always activity at that point in time. But when does it actually cease trading? I never. It's midnight. The dash line is midnight. Let me look at like. Let's see other stock. So there's 17, 18 o'clock. Is it 4 a.m. to 8 p.m.? So that's what I thought. 8 p.m. is like where it technically opens, but there still seems to be some electronic trading after before 8 p.m. as well, which again makes sense. Let's see, we close at 15. And again, you have post-market trading 15, 15, 16. Seems to be nothing here. Oh, this is the time where there's no orders being filled. Yeah, this is when like stocks kind of start back up again. Depends, I guess it depends on the broker, like different, I guess brokers might allow some trading on the clock. Honey Entertainments, you were banned entering, hold on. Entering the Funnex giveaway with 2 accounts without knowing it wasn't allowed. Ah, okay, well. Since you admitted it and you didn't know it wasn't allowed. Come on now. But I didn't know you're banned. You're banned from the giveaway. Did Slacks ban you? He's gotten pretty good at catching people. You have a YouTube channel with 40,000 subscribers and no content. Honey Entertainments, I have a question. What do you do on this YouTube channel? Is this a YouTube channel that you own and produce content on? Or is this a YouTube channel that you purchased and gutted all the content? It's curious question to my to your response. What do you do on Honey Entertainments? Do we want to know? This is the latest Malayalam film news, exclusive actress updates, trending celebrity stories, and viral video content. 40,000 subscribers and no content. Your YouTube channel, but your video removed by copyright strike? All videos removed by copyright strike. Oh, that sucks. Sorry to hear that. What's going on? The market going? Oh, we are going up. That seems like through Thinkorswim, they definitely allow trading throughout most of the evening. I don't think there seems to be a pause in order. I don't know what's going on here, but I know that like essentially after like, you know, the evening starts, you start to get things picking up at 8 p.m. It's always considered like 4 p.m. to 8 p.m. like quote unquote the break, even though you will see some trading, I guess. It tends to open back up. You can see like on holidays when that actually happens, right? Half days. The pause you can see right here. Hold on, wait, where's NVIDIA? Like on that, this was Friday. Yeah, so like on weekends, you can see where the market opens back up for stocks. It opens back up at 8 p.m. That's where I get that number from. This is 7 Central, so at 1900 Central or 8 p.m. that's when stocks open for the week. So I just assumed that was like when things sort of like pick back up every evening. The holiday, this was like Christmas Eve was this day. Wait, hold on. Half day, same thing, right? That's Sunday, sorry. It was. Every broker can be different though. Brokers can allow trades on different hours as well. Sometimes your brokers may not show certain things because they may not allow trading. Christmas was Wednesday, right? Christmas Eve. Thursday was closed, and then Friday we're back. There was all day Wednesday, and then Thursday night so Wednesday this is where I get those numbers from. Like, we cut out the market, quote unquote, like here's the holiday, ends at 16 o'clock, 5 Eastern or 4 Central. It opens again at 7 Central. So 3 hours of difference. So around holidays, you can see when it turns off and turns on, they take a break. But I don't know, like throughout the day, if there's like any kind of mechanical device preventing orders during that time. So my question is, you have a YouTube. Have you had a chance to contact someone from Apex about your payout? Yeah, I have. I sent it up to them. So, as far as it goes, you know, I'm having them look into it. Yeah. I'll let them know, bud. Do I trade gold? I don't trade gold. Yeah. So the person said, Harry Dahlia. I like that name. Are you using a new indicator? Kind of, yeah. Like I'm kind of looking at it as again, I just fixed the formula middle of the day, so now we have some new data for it just to see. It's missing the bigger part of the indicator. There's a whole nother indicator that is going to be added to this, the stronger of the two. This is just showing me kind of like that pressure strength. Like in an example, if this is moving up to a pivot and then this starts declining, then you could utilize that as an entry point. But the new indicator is arbitrage between the futures and that. We say on the email, they'll be processing the full payout and the number on the total amount of profits you have accumulated per account goes in your customer profile. So think of it like this, right? Let's be realistic. I know you're angry. I'd be angry too, right? Couple of things. Let's assume something, right? Legally, you have it in writing. They're going to pay you. Okay. They are going to pay you. And if they don't, could you sue somebody? You could, right? But don't until you give enough time. Let's assume this plausible scenario. If you sue somebody, you're going to cost you 100K to get the 600K. You know what I'm saying? After taxes, your take home's not that much. You're already losing 40K to taxes, right? Well, depending on your bracket. So what they might be doing is they might not have the cash flow to pay you out. This is a thing with firms. I'm not saying anything about this firm or anything, but just assume that they don't want what you think can happen. Right? So they're probably like, we need to pay out, but like we don't have the money. So let's kind of wait till we get there. I've heard that there's delays because big payouts like that, they may not have the cash on hand. So if you do a lawsuit, you might just be cutting into your profits even further unnecessarily. If after some time you don't pay out, you don't get paid out, retain a lawyer to start sending them emails to threaten that and then really put the fire under them. That's cheaper than a lawsuit, right? A lawsuit's gonna cost you a lot of money to take the term. A lawyer retainer, couple $1,000. Email from the professional institution with that. Social media is the last step at getting the problem solved. It will solve almost nothing. I think a lot of people think that cancel culture will make people not use Apex. People will like side with you and be like, oh man, that sucks. But then they'll still be like, the gambling addicts, they are still playing the same game. Nobody's going to change their wallet. Wallet doesn't choose prop firms as much as we think it does. So that is just to continue to press. Make that your last resort, I would say. Give it some time. Get the benefit of the doubt. Just assume that maybe they gotta make that money. You know what I mean? I'm trying to think of a way that saves you the most money right now. The cheapest way is to have your lawyer start
sending some letters like, hey, you know what I'm saying? Like, I'm not a professional legal advisor or anything. If that was me, that's what I would do. I would take it in steps and elevate the steps each time. I wouldn't jump straight to lawsuit because you're going to walk away with almost none of that. Your lawyer is going to get most of it, right? Depending on how detailed it will be. But I would say that if it doesn't happen in like a month and you write them every week with the paper trail of you writing them every week, which you should, then you get your lawyer to start writing them every week with a countdown. You guys have 60 days or else sort of thing. Give them adequate time to come up with the funds because who knows how stressed out these firms might be. We like to think that these firms have billions of dollars sitting there. They may be on the fringe too. We don't know anything about it. So, you know, that might be what the case is. You know what I'm saying? Yeah, a lawyer would start with that anyways too, as Kevin said. Yeah, a lawyer will just be like, you know. And if you start threatening them with like lawsuits and stuff immediately out the door, they're gonna like probably shrug you off in general. Now you're an enemy. Now they're gonna, you know what I mean? Now, like if you don't step into it, if that's the case, you know, it'll be even harder, I think, the more aggressive you go. Letter legal head goes all along with, yeah, like, I honestly, like I said, I'm not siding with anybody. I try to be like neutral with like, the goal is to get you as much money as you're owed, right? And then what's the easiest way to get it? It's probably, like I say, it's probably plausible that these firms don't got cash flow that big. They probably got a, you remember they had a 90% sale that stopped for a little bit. Now they got another one. I mean, you know what I'm saying? They probably got throughout these 90% sales to rake in some cash, pay out the big payouts. Right. We need other programmers. We eventually might. Like now we're kind of staffed fully. Remember, I own a company that staffs. I own a coding house, so we kind of like when it comes to programmers, we sort of staff from our. We bought a company that staffs programmers in India, so we have like an unlimited supply of talented programmers. The one thing we don't have an unlimited supply of is talented programmers that trade. And so every once in a while, especially in this company, there's the need to have somebody that knows trading and knows programming. And you're worth every penny at that point. And when we get to a stage like that, we'd certainly hire. Currently right now, most all of our coding is not require any sophisticated trading knowledge. Somebody says, how do you make 750K with 228 Pix accounts? That's not that much. That's 30K a pop. I mean, that can be done in like a single day, right? 30K. I made 30K yesterday in this trading account. Not hard to do. If you get lucky multiple days in a row, you know, with some pretty well placed big bets, you can. I've seen people build up $1 million balances with Apex in less than a month time. Yeah. Wait, but you're not, what do you mean? You don't want the giveaway prize? You just want to be back? No, I forgive you. I'm just saying is like, you're still able to chat, so it doesn't seem like you were banned. If you were banned, they would take away your speaking privileges, so. Doesn't seem like you pissed them off too much. Remember, I don't make the decisions here. I run my company as such. The talented folks that I hire, I stand behind their decisions 100% of the time. I rarely, if ever, will override a decision of my staff. That is the perfect way to run a company. Hire people and trust them to do their job and stay the fuck out of their way. They're smart and they made a good decision and I trust their decision. So you got to ask them, not me. You know what I mean? Like, I never override it. I very rarely will come in and say, hey, unless like I've got new information for the thing. I'm usually like, so you got to go with whoever banned you. Mr. Slack's a message. Mr. Scott, here's $10. If you get unbanned, all the others will come and ask me unbanned too. I gotta tell you, man. Andrew ain't no dummy. If Andrew banned you, he's got that like a paper trail of evidence. Anyways, but Miso, I'll poke him again this week with your case and like really follow up with it. Response I got was thanks for sending it in, we'll look at it kind of thing. And like I didn't follow up. Well, I should follow up because it's been over a week, so I'll see what they haven't said anything back to me yet. But I didn't think they would, right? Because it's not my for privacy reasons. They're not going to share details with me about your account. So I wasn't expecting to hear anything back. You know what I mean? So if I write them, they're not going to write me back with, here's how we resolve. No company would do that. This is your private information. So I just assume that they're going to take it from there, and I'll reach out again. What did they say? I wasn't really expecting like a follow-up or anything. Slacks is a very good person, but didn't get a chance to explain your side. Well, explain your side. Go to the Discord. Go to the Constance channel, poke out the Slacks, explain your side to him. He's the ultimate authority there. He has a whole system he does to track and find contest cheaters. And if you say you accidentally, or not accidentally, you said you purposely did it because you thought it was okay, then that's fine. Like, it's if you know it's okay and then you do it. Like, honestly, if I was entering a contest and somebody didn't explicitly tell me, you know, can't enter more than once, I get it. I'd push as far as I could. But the only way that you get caught is if you try to claim the prize more than once. See, that's the problem I'm having here, honey. I like you. Sound like a nice person. But Slacks doesn't care if you entered more than once. Slacks will care if you entered more than once and you try to claim the prize more than once when you get caught entering more than once. So you attempted to claim the prize, the only time he'll check up on it. He's not scouring people that entered. They're not taking the prize. You take the prize, we have a whole system of figuring out how you do it. Right? So it means you try to claim the prize from an account, a second account. And that's where the problem is, I guess. I mean, do I still trade Apex? I personally don't, but the reason I don't have the capacity to trade like a million firms. As soon as I go live with Funded next, after that, I feel like I want to take Profit or Apex just because I haven't done those, and then go live with those guys. And maybe Apex has a live program, but nobody really has gone live that I know of. Okay. Yeah, so honey, like I said, if you got banned by winning the prize on 2 different accounts, right? That is flaggable offense. And it's understandable that can happen. You're at the judge, jury to Slacks. I'm going to tell you, he's probably going to say no. But you can always plead your case with him. I'm not going to be mean to you because I don't want to lose a viewer. I can't side with that because in reality, the contest is not designed on YouTube for you to be logged into multiple accounts at once. That is kind of a stretch when you see on the screen that there's 1,000 people in stream and 1,000 people entering the contest and you're like, let me enter more than once. You kind of see no one else is doing it. It's kind of obvious you shouldn't be doing that. But I get it. You can argue that it's not explicitly stated, yada yada. I get it. You gotta take it to the judge. And I gotta stand by the judge's decision. Hopefully you're okay with that. He has a uniform way of dealing with this. Honey, you can't talk. I won't do, I'm not gonna do anything about it. I'm gonna do absolutely zero. You're wasting your breath here. I love you to death. Gotta go to the man himself. He's the boss here. I can't pull strings with the boss. This is my rule here. I don't override their decisions. The mods, I don't override their decisions. Farina probably been banning people left and right. Have I ever told you, why'd you ban this person? Zero. I trust these folks to do whatever they want to do, and they're doing a good job. All right. I gotta tell you, you gotta go plead your case with the man in charge. You gotta ask him for his mercy. I'm gonna tell you, he's probably gonna tell you. All right. According, and now again, if you say anything else, I'm if you allow me to share your story on the stream, I could tell you because Slacks listens. He's listening right now, right? I'm gonna tell you he's gonna say no, and apparently you had 2 Discord accounts to try to claim the prize with the second Discord account, which matched the contest winner's name, which wasn't your name. It didn't. That doesn't look too good, man. But take your case to him and try to play it out. But he says no. He's gonna say no. I gotta tell you. You had a YouTube account with one email, then you try to claim it with a different YouTube account and the same email and a separate YouTube account to mask the fact that you had a separate email. And your name is actually Jishnu Jayakumar, and you're actually a man with an empty YouTube account. 40,000 subscribers. And you're on that YouTube account right now pleading your case that you aren't using fake accounts. I'm a little shocked here. Honey Entertainments. What happened to Pop Zone, your other YouTube account? Or Jishnu, your actual real name? He's a he and a she. He's like both in once. See what I mean? Like, and when I have to talk to my admin here, who makes these final decisions, I'm not like a rocket surgeon here. My brain with some like where at, but the way that it seems to me, it does sound a little fishy, a little bit, like a little bit, just a little bit. Shy, you just joined the Discord, got 3 invites from 3 different mats. Imagine if some scammers should report. Shmai, let me tell you about this. Like, Discord just sucks balls and there's nothing we can do about it. On the DM side of things, we can't police that. They're not in our server, but they're just lingering in the server. Like, somebody's in the server on a fake account, and then they'll DM you from another account that's looking like it's me. Honestly, like, the only people you can report to is continue to like spam and harass Discord. That there are people that are posing as prominent members of the community on fake accounts seeing DMs. Discord needs to change that feature and allow some kind of like verification process. I've been yelling at them for years. Discord is horrible. And according to our robots that do their job, the bots picked you up also being live on both of those YouTube accounts today as well, the same day you were actually trying to plead your case. So we have evidence that you were actually logged into both of those accounts today in this stream today from the active viewer list as well, which our bots read in real time. There's ways we find this out. So it would kind of help your case to say you made a mistake, you learned your lesson, but not on the same day you were also logged in the same accounts. I don't know if you learned your lesson last 10 minutes or what, but I'll tell you, man, Slacks is a fucking sophisticated man over here. He figured out all kind of stuff. And how many people are doing that? Well, like they don't get the prize. Last step was we verify with our prop partner. If you're with the prop partner and we figured out that you're trading out, like when you get to the KYC level and they found out that you scammed our contest for free account, they'll ban you. And they'll let us know they banned you, and we'll let everyone else know to ban you as well. And we'll remove your privileges from every prop firm we work with. And that's how far it goes, because they don't want to get scammed either. And so if you are the kind of person that breaks their rules and gets banned and you log in with Honey Entertainment and try to start another prop account with the firm you get scammed, they don't like that either. So if we catch a scammer, they pat us on the back for doing it. So if you get caught going to request a payout and you get to the KYC level and you hit their little black book of, oh wait, You know, we found this person before. This person's been banned before. The word will pass to us and pass to everyone else. And you'll get banned everywhere in town as well. On top of that, I'll send Tradeify, my fun and message, and they'll thank me for doing it. So don't try to scam prizes, because ain't nobody in this business like the scammers. This channel is an old channel for your regional movie clips on 2020 that on time you got the subscribers. So you use 2 accounts, you admit it. I get it. Gotta plead your case to the man himself. Gotta go. It's like to send him to Minnesota. I can't do anything about it. I wish I could. I'm not the boss, but I'm gonna tell you, Slacks is gonna tell you to fuck off in the kindest way possible. I can't help you. I can't help you there. You were on 2 accounts today, honey. You were on your 2nd account today. Even today, you were doing it. Oh. But he's not looking at your DM. I wouldn't be either. I'm not gonna lie, I wouldn't be looking at your DMs either. You should just message him with your 3rd account. I can't even. Well, that was so funny. I spit out my lunch. That was hilarious. That's beef. That's so funny. That was great, dude. That's the punchline. Let's get back on topic. All right, so I'm engaged in a small short, 2 contracts. More like I don't have any suspicion of a direction either way, other than in general, I feel like the market's going to trade lower into the end of the year. It's small enough to absorb a small loss in case I'm wrong. And then it just gives me something in case it does move lower. It's got a pretty solid move. I'm probably get 80 points in either direction. So I'm keeping it small with 2 contracts. It's like $3,000 either way. If I trade Apex, would I consider copy trading, or is that something I never do? The answer to the question is yes. I don't recommend copy trading all your accounts. Like if you have 5 accounts, don't copy trade 5 accounts. If you have 20 accounts, break it up into chunks of like 4. And managing 20 accounts is hard. Like I've at points managed like 15 accounts at once. It's very hard to do. So with Apex, a good rule of thumb is to batch it into like groups of 4 or 5 if you do 20, and then trade them like they're 5 accounts, 5 batches of 4. The Apex is like the one exemption to my rule. I don't copy trade most all firms. When there's 20 accounts, it's really hard to manage. So so with something like a 20 account Apex, I will batch it in the chunks. Somebody says, I don't copy trade all accounts because I'll just blow them up. You guys need to realize that you can just add money into prop accounts like Matt does this life. That's pretty funny. This is true. This is true. I'm gonna tell you though, what's the worst problem to have in life is to just be able to add infinite money to a trading account. Man, I fucking hate my life. It's terrible. The fact I can be able to do that, I go to bed every night crying. I hope I don't lose money tomorrow. I'll just have to put $1 million back in. Oh, what am I gonna do? No, seriously though. Life is so hard. These price action. Hopefully we trade lower today, I think. And add money to your prop accounts. That's pretty funny. Like if props start having like a replenish plan, that'd be hilarious, dude. Like you can add funds back to your prop account if you bust it. That's really, that'd be an interesting add-on. You have 40 evals pass and 20 from copy trading to get half of the drawdown. From here, what I suggest, play aggressively, and if I blow, replace the past evals, the evals get to renew. So the way that I like to trade the cheap eval firms is to burn and churn. Like, rule of thumb with a 20 account and 90% off is to buy 60, pass 20, get buffer in 5, get paid out in 2. Like the easiest way and cheapest way possible. Like I allow myself to aggressively trade them to build the buffer very quickly because they're cheap. I'm more inclined to trade them more aggressively to bust them to build the buffer to then trade them slow than I am to copy trade or trade them all at once to try to trade them seriously together in one go to risk losing them all in one bite. And only when they're 90% off. Like when you get the accounts for 20 bucks or less, it costs you nothing to lose. So when it costs you nothing to lose, I play that to my advantage. With funded next, my funded futures, you can't do a strategy like that with those because it's too expensive to lose. So personally, again, that's not, I can't give you advice, Karthik, but like that's personally what I do. If I have 40 evals pass and 20 copy trade and get half of the drawdown, from there, I would make smaller pieces and trade them 5 at a time. I wouldn't trade all 20 at once. I would trade them 5 at a time and strategically trade one. And if it makes money, be done. And then the next trade a second one. If it makes money, be done. If it takes a loss, move on to the third one, recycle it down to the bottom. So this rotation method is kind of a hybrid, but also a good risk management strategy. Don't trade all 20 at once is a strategy I teach, is to not do that. Do 5, 5, 5, and 5. Letter them A, B, C, and D. And say that you have a couple of trades. Say that I want a long there, have an option along there, and option along there. If we fall to there, I hit it with A. If A takes a loss and I'm done, then A is down. So then A goes to the end of the list. A is down to here. Now A might be down $1,000, right? Let's make a number. A took a loss. I hit my second target here, then I hit it with B. Oh, B made profit target. Good. Take out a money. Check. Cool. I made money with B. I made $3,000. Okay. So B is done. B goes to the bottom of the list below all the places you put the losers. So all the losers get stacked below. All the winners get pushed aside. Now we fall to here. I hit trade C. C also lost money. Okay. Dang, down 2,000. So C is here. Every time you make your profit target with one of them, move it out off the list until you've made profit in at least all of them and then start over. Does this make sense? So it's like 2 different buffers. The reason for this is that you're utilizing how cheap it is to lose. So an example is your losers get recycled back in. Your winners get pushed to the side until all your losers have at least one. So the example being A, if A makes, so here's a list, right? There's your winners box, and then your losers box, and then your neutral box. Neutral has A through E, right? If A loses money, it goes down to the bottom list. If B loses money, it goes down to the bottom list. If C, D, and E make money, they get pushed to the side and you don't use them anymore. Then you circle back to A, and if A loses, it goes below here, and then you use B. If B loses, it goes back to here. And you're trading A and B and A and B and A and B until one of them makes money, and then once it makes money to your profit target, it goes down here. Then you got B. Then you work on B. If B blows up, you got 4 that made money for the next day, 1 that didn't. But you're always trading, and the trick is with this order is A, B, C, D, and E are the accounts with the most buffer. The first trade you make should be the account with the biggest buffer. If A has 10K of profit and B has 8 and C has 6 and D is 2 and E is 1, in your strategies I'm along today, then the one that gives you the least psychological trauma and the one that gives you the most fat to play, the riskier trade out the door, is the one with the bigger buffer. It has the most to lose. So if you're like, I went along today, shit, I was wrong. It's crashing. Well, the biggest account can take that hit. So I cycle in my accounts with the biggest one first, in that order. So say that like A wins and B loses and C wins, D, and then E loses. Now you got B and E sitting there. You trade B, it loses, goes to the bottom. E blows up. Now you got B left. B still has some fat in it. Play, play, play. Finally makes money. Then it goes down. In this particular case, if the market's like crashing to here and you buy and lose, crashing there, buy and lose, crashing there, buy and lose. This account survived, and so did this one because it has some fat. This one also survived in the riskiest place when the volatility is the highest because, well, it doesn't have a lot to lose. So it's cheap to lose when the stakes are high. So you throw the accounts with the least amount of buffer in the most volatile conditions. That account rotation philosophy is how I trade the 20 account or the multi-account thing. First trade out the door, the account with the biggest buffer. What's my biggest loss ever and how do I feel about that? Do I take a break from trading after that? One of your revenge trading stories you had earlier? The biggest loss ever in a day was probably 200K plus, something like that. I don't remember, that's the thing. I've learned this as I got older. I've lived a life of fun, partying, partaking, if you may, on certain things. As I've learned, I've gotten older, certain partaking has made my memory pretty bad. I heard that benzos make you lose your memory, and I used to do some recreational party drugs and then, you know, pop a Xanny to go to bed, right? So at the end of the day, I don't remember a lot of fine details in life. This is a side effect of certain things. No Quaaludes. But anyways, jokes aside, when I get older, I mean, partially true, but when I get older, I don't remember a lot, exact details of a lot of things. But I know it was definitely 200 plus. The day that sticks with me in memory is the day where I lost like $10,000, the first time I ever lost $10,000. I consider that my worst loss ever mentally, because that was the thing that like fucked me up upstairs. I call it my towel folding day. I still remember that day. So the day of my first money in a trading account ever, making money for like a month or something, then have my first 10K loss in a single day, which at that time was huge. I was a kid in my 20s and it was a substantial amount of my entire capital. Not knowing, and again, this was 2010. And so like, you know, in the days progression, the market was like dying and dying and dying, and I was just losing and losing and losing, and I'm throwing more in and throwing more in. Like I just completely did this wrong thing the whole way into it. And I just basically like went crazy a little bit. I didn't want to touch the button. I just wanted to hope that it would turn around. I did everything wrong. And to distract myself from what was going on, I went to my, I was like, okay, let me just clean the house. I was cleaning stuff. I was picking up stuff. I was like, I had to kill time. Just like, I got to make it till the end of the day. Things will be fine by the end of the day. I just keep myself busy. I played some Halo for a little bit. Halo 3 at the time, I'm sure was probably what was out. And I remember doing my laundry and like folding my towels, right? This is the whole thing. I was folding the towels and I was folding them like meticulously. If there's a slight imperfection, I'd redo the whole thing. I was like, these towels are gonna be perfect. So I was like perfectly anally folding my towels and stacking them and stacking them and stacking them. And then once I got them like all stacked, I'm like, okay, there's the towels. I was like building a fortress of towels, and I was sitting behind, I remember sitting on my floor, the back of the room, my towels were stacked up in front of me, and I'm like, peeking over the towels to like, oh, you know, I'm just sitting there, and I'm just like, I don't even want to look, you know? And like, I was kind of like using it to shield me from staring at the account and the trauma that's coming with it. So afterwards, I did the stupidest thing ever, and I was like, man, there's like a couple hours left in the market, was I decided to like knock the towel tower down and shake them all out and refold them because I wanted to fold them another way. And like, I was just, I was considered like that moment, like going crazy a little bit. Revenge laundry. So I refolded them just to pat. Anyways, at the end of the day, I was like, what just happened? Like, you know, it's one of those events. That's what the day that sticks to me the most. Other times when I had bigger losers, it was at a time when I had the ability to lose big, I guess. And it wasn't as like traumatic for me. I would say some of the most traumatic trading days I had were early on when I would lose amounts like, you know, I might have had 50K to my name and I'd lose 25 of it or something. And that would hurt a lot. Like when I tell you my biggest monetary loss in a day could have been like 200K, it's where 200K wasn't like enough to really hurt. It was where I was at a level where that was not psychologically damaging. So it hasn't been in the last 9 or 10 years when I've lost an amount that's made me freak out. Like as I started, you know, going full time, I never really traded to a degree where everything I lost, I had zero at the end. What, I got so many towels? Man, I'm gonna tell you, I had like beach towels, regular towels, like dish towels. The towels, man, I cooked a lot. I had a lot of towels. I have an apartment. I threw tons of pool parties, so I always had lots of towels laying around. But that was my, somebody said you like me more now when I talked about recreational partying with the Xanny nightcap. Yeah, you shouldn't take Xanax for prolonged periods of time. Your memory will go kaputs. Gooning towels, pretty much, dude, pretty much. Time to refold and find a new strategy, yeah. So that became, those are the days that really stick with me. Where like you just temporarily go insane and then you're just doing, you know, stupid stuff. I wasn't like streaking through the quad or something to get out my aggression, but I was certainly revenge folding towels and, you know, over cleaning stuff that was already cleaned, organizing stuff that was already organized, you know. So, been there. Like lately, what makes me chuckle is, you know, like fast forward 15 years into my trading career. I cycle in 100K into this account. Look, it's at 150 now, right? And I have a day where I'm like, I'm gonna swing for 20 to 50K hits, and if I lose, I'll just put more money in the account. I told you guys I would do that. And then I lose like 75K one day or something like that. And there's like hecklers heckling, and I remind myself, I was like, man, when I was 26 and broke, that would seem like a heckable amount. Like, to me, within minutes, I put the same amount back in the account. That's a good place to be in life. But it reminds me of how far I've come. Like, they're laughing at me now. I'm laughing at them when I wire in their salary on a whim, right? It doesn't mean I'm a bad trader. It means I'm a great trader, actually, that I keep my losses limited that day to what I'm willing to lose. I completely partition the account to lose a certain amount. I've learned so much over the years to be able to like keep myself. And I know this market, as crazy as it was in December, the rapid ups and the rapid downs, it could have easily swung the other way had I flipped the coin the right way. I just didn't. And the part of trading is, you know, the stakes are high. I choose to bet big, but my losses were certainly maintained. 150K is a week of trading for me. It's not a lot of money for what you see me do every day. It's not a lot at all. It's the standard. And like, but when somebody has something to say about it, just kind of shows how many people in this industry with streams and Twitter accounts are dirt fucking poor. That's even an amount worth mentioning. Frips lost $100,000. He lost $100,000. He'd laugh his way all the way to the fucking Ferrari dealership while he's buying 3 of them the next minute. Like, there are people that live on completely different planes of existence than a lot of the social media losers out there. Like, you know, that's why I always tell people, make sure your risk management matches your appetite for loss. My appetite for loss is pretty big. Right now, my goal in life is planting. I've got so many ideas I'm planting money in places. This is where I am. I'm not saying it in a braggable way. I'm saying it. I've got so much money sitting there. I got to do something with it. So we're investing in bringing in 5 fitness concept studios to franchise and use. I got to put money somewhere. Fucking Shaq owns like 75 Five Guys burgers or 150 Five Guys burgers. Like, you know, I'm trying to put money in places at this point. So Doesn't Shaq own like the majority of like Five Guys franchises? How many does he own? That's my advisor was telling me about. Shaq, right? He has 155 locations. 10% of the Five Guys burger franchise is owned by Shaquille O'Neal. You know what I'm saying? I'm at the point in my trading career that I'm diversifying wealth into other businesses. Like, there were two totally different planes of Matt Coward's life. This plane of life is, you know, there was a time when trading was all I did. Now this is the time where trading is a portion of what I do. And so this era is a whole different style than what I used to do. And this era is, my appetite for risk is pretty diverse. And it's also, when trading, it can also be pretty big. I don't fear the market. I don't fear taking big swings at the market. I've been there when those amounts of money were devastating. I could lose 75K in a day. I'd probably cry myself to sleep for a month 15 years ago. Many people forget I spent a lot of time. So I have 5 contracts short in one of my funded next accounts. I'm gonna go ahead and close that. I have 2 contracts short in one of my funded next accounts. I'm gonna close that. We'll go ahead and close that too and just take the profit there. Oh, I'm sorry, this screenshot was young. This is what it was before, 47.9, 42.9. So now it's 57, 34, 42, and 9. And this one is 52 for the day, so I'm pretty done. I'll take it, right? I'm not even angry. I'm not taking more. I'm good with this. Sorry about that. I forget that I moved this down here after my funded TV. Not a bad haul for the day. I think, what's that, 891. So those are my 4 funded next accounts. They still haven't pushed me live yet. So I don't know how much of that I'm going to get to keep. That's the thing. I think a lot of this will be forfeited into that account buffer. I know when I request my next payout, they're going to tell me, congratulations, you're finally going live. I got a heads up from my contact there that they're going to push me to live. I think he was warning me, hey, it's probably going to happen soon. So I took out just enough payout before that to not trigger. I took out another 60. By the way, I took out another 60K with funded next. Remember I told you guys I took out those 2 big payouts from them? I got another 60K. They still haven't triggered the live yet. No, they're gonna, this next payout, they're gonna move me to live. I don't know why they haven't moved me early, but they said it's coming, so. What was that? 91, 13.3, 14.2, 19.4? Bad. Almost 20K day. So I just traded back again. This is back to the indicator, right? It's still not below 0 though. But it's a flat day, so maybe that's the thing. Right here, the minute the indicator starts collapsing very quickly, also is mirrored in what's going on in resilience. But you can see there's a different look with resilience, right? Slightly different look. Like this one is, I think, a better actionability. Kind of weirding me out that it's not going below 0, but maybe that is what it is. Well, I mean, it looks like it was below 0 over here. Only when we started the server. Yeah. So like an example, at half gap here, it started pulling back, and I was thinking, I don't know why it's not going below 0, but maybe that's just because it's just what it is. See, it kind of mirrors a little bit of the pivoting of resilience, but you can see how it's significantly different. It's not, resilience is built off of this. This is one part of the resilience, but I thought pulling that out by itself would be a little bit better of an indication of things. See, like, it certainly looks a lot different in places. But it still sort of mimics the actionability around half cap, so. Yeah. All right, we got boot camp today, don't we? You're fresh to get some new ESC plays for last hour. Speaking of some plays, How'd you guys like to play a game? A game that every single one of you can get in on. Every single one of you whose name is not Honey Entertainment can play this game right now. You have qualified for the chance. You've been selected to see if you've been approved to play the game 100% of the time. If you get selected. You have been given the opportunity to apply for a chance to play for this game every time. Unless you've been denied the chance to play this game every single time. So most of the time it works every single time. For some of you guys, well, you're fucked. And so at the end of the day, let's have fun. We'll spin the wheel. Apex is up and ready to go. Everybody can play except for one person. I can't help you. Honey Entertainment 3 is back. On the third account. I'm dying. I can't even. Just message Slacks on your third account. That made me like spit out my eggs, dude. Apex. What's going on here? No names. How come nothing's showing up? Hold on. Try this again. Did you hack me? What's going on here? Well, that's weird, guys. Nothing's showing up. Oh, here we go. Sellers are remorse, man. Should have held on for more. That's weird. Oh, the bot's broken. Let me try this really quick. Oh, it logged me out. That would be why. Okay, let me log in real quick. It probably requires authentication. Connect to the stream. Try this one more time. Let's try this again. Okay, nothing's showing up. What on earth is happening? Oh no, the bot is broken. What is going on here? Ah. 100% of the time you can enter. I know, I did. I said 100% of the time you guys can enter. If you're allowed to enter, then 100% of the time it works every time. Clearly, the bot hit trailing drawdown. The bot blew up its account. Is this karma? Is Honey Badger hacking me now? It's kind of weird. I relogged in. What? All right, I got a better idea. All right, participants list. Copy. All right, well, looks like the bot is dead, but you know what? We're not. So we're gonna do it the old-fashioned way. What our grandparents used to do when they were kids. When you have a giveaway is you consult AI. The old way to do it. So choose 3 random names from this list. Easy as that. If Honey Entertainment's a winner, I swear to God. All right, this is less sexy than the bot spinny wheel. However, Flex Algo, Groot PL, Trader Naman, y'all are the winners, 3 Apex accounts. We did it the old-fashioned way, the same way Grandpappy would do it. Congratulations. See, it's not as theatrical and not as cool to do it this way. It's kind of like anticlimactic. You're just like, ugh, that sucks. But you guys now have 3, you know the drill. You got 3 accounts with Apex. Any account Any account size you can use the code for. Free accounts, check out Apex Eval. Very nice. Apex Eval. See, like it was so quick. It's like, man, it came and went, right? The 2-pump chump, that one was. Your grandfather's AI was your grandfather. The way it used to be, right? When everybody's grandpa just kind of knew everything about everything, kind of. And if they didn't, they just made up something that sounded good and you went with it, right? Winners, as Farina's giving you guys instructions, thank you. Winners go to Discord channel contest. Discord links in description of the video. Message Slacks your email ID. You can screenshot of your YouTube ID also as well. For Apex, your email ID, whatever you sign up with, give it to him. He will track you like a hawk and make sure that you're not logging in with 5 different accounts. Ruin you if you do. Just kidding. But you have an hour to message him or you forfeit your prize. And Jishnu Jayakumar. Honey Baby Entertainment number 2. Honey Baby Entertainment number 3. Possibly Honey Entertainment number 4. Hopefully in life, you'll learn that cheating's not the way. That was some bullshit. It was so fast, right? It wasn't even fun. It was so fast. It was boring. Right? Well, everybody's like, it's over as quick as it started. I know. That was some bullshit giveaway, I know. 2026 goal, win an account finally. Nope, never gonna happen. Never gonna happen. Well, maybe tomorrow. You guys gonna come tomorrow. Remember, giveaway Bonanza in the day. We're giving away all the last of the accounts that we have. So for the month, we've got probably like 50 something, 30, 50 something in there. Can I buy an Apex account and not activate it for a few weeks? I think so. Can I just spin a cosmetic wheel for nothing? What do I have that's spinnable? Let me put some names on here. Hold on. All right, let's see if I got anything to write on. And the right. Well, you have to use your imagination. Everybody's name is now written on this piece of tape. If it lands tape side down, then all of you win a prize. If you win the prize, then all of you win a prize 100% of the time. I promise. Okay, ready? Did I break it? Hold on. That didn't even work. Hold on. Let me try something better. Maybe it'd be better if I put this on a stick or something. I got a stick in here. I got a stick. All right, ready? Hey, that would consider tape side down. Congratulations. All of you win a prize if we're giving out prizes at the time, which we aren't. Fortunately speaking, 100% of you don't win a prize. Only win a prize if we're giving out a prize. At that time, we weren't actually giving one out. So unfortunately, none of you win a prize. But 100% of the time, you win a prize some of the times for hosting a giveaway that gives away prizes. So fortunately, this year, all of you won in my heart, but there's no takeaway prize other than my love and friendship, which is, let's be honest, the best kind of prize you can ever have. I don't know why I got tape on my desk. Probably from wrapping presents at some point. All right, guys, I'm gonna get out of here. I'm done trading. Pretty good haul. I think it was like 19K. I'm still digging out of that loss from December. Gonna rest a little bit for boot camp, and in 40 minutes, we'll see y'all later. We'll catch back up and run some boot camp classes. As always, we'll see y'all. Have a good day and have a good one. I'll see you. My love's being edged. LOL. Tape site up confirmed. Okay, we'll see y'all later.